afternoon, everyone. I hope that you have enjoyed your lunch. I think that they've done a tremendous job with the catering and all the sandwiches and sweets and coffee and salads. Very healthy and nice. That makes sure that you are properly awake for the afternoon here at Stage 2. Nordic Blockchain Conference 2026, of course, brought to you by the Nordic Blockchain Association, their partners, their sponsors, your speakers, and of course you yourselves as wonderful attendees. Thank you for all being here, and I hope that you're enjoying a great time. I am Alex. I am the founder and CEO of Trilled Labs. We're a Dutch startup, for instance, providing you the networking app alongside other things that we do in the space. Now, first of all, I've been asked to share with you that Firi, the exchange, has gotten their MiCA license today. We'll also hear from them in the coming days on various panels and whatnot, so that's big news. And of course, great progress for the space. Now, we're going to move now to a next panel discussion, and indeed, about MiCA. How fitting. I'll be very, very welcome to bring to you these various people. I think that we've had a couple of small changes in the agenda, potentially, but let me start, first of all, with, let me just check if I have this all correct. No, there have been a couple of changes. So, Svetlana is on my iPad, actually. Please feel free to join the stage and put your hands together for Svetlana Prussova of Coinspaid. Now, if I'm not mistaken, Svetlana, you are on the management board for Cryptoprocessing by Coinspaid, where you provide strategic oversight across risk, compliance, governance, and finance. You've also held a position, and I love your blazer, it's very beautiful, side note, as the legal and compliance officer also at Coinspaid, based in Estonia, right, if I'm not mistaken. Now, crypto processing by Coinspaid helps businesses integrate crypto payments in their business model, making fast, secure, and compliant crypto payments. Now, that's fantastic. Alongside yourself, there's, of course, Tim Zolitz of Crypto Risks Metrics. Please feel free to welcome him on stage and clap. He is the CEO of Crypto Risks Metrics and is the co-founder of the Blockchain Association Schleswig-Holstein, a blockchain community within said region, and you've also co-founded Coinvest Capital. You're building, I believe, all sorts of beautiful software and data solutions for regulatory compliance. Okay, fantastic. Eleonora, I've already seen you before. Please join the stage as well. Very, very great that you're here. Of Bird & Bird, thank you for clapping, everyone. Senior Associate in the Finance and Financial Regulation Group, in Stockholm. She has expertise, a lot of expertise in legal and regulatory oversight, really having worked at the Swedish Financial Supervisory Authority as well, alongside many other types of institutions. And of course, Bird & Bird, we've already saw Johannes, I believe one of your colleagues here earlier, massive, there he is, yes indeed, a massive company with over 1,600 lawyers in over 30 offices. Who else do we have here? Anna Agu-Alekseitšik. Sorry if that wasn't great. Please feel free to welcome the stage, though. Thank you. Let me have a look here. Now, you're the co-founder and CEO of Lex Law office, helping IT and fintech project with legal matters. You're also doing lots of other things. You've co-founded, for instance, MiCAexperts.com, which is, of course, great also for this topic over here. And Lex Law Office is a modern law firm that helps provide legal assistance in all sorts of different ways. Now, last but not least, please be welcome on stage as well, Reinis. Znotins. I'm gonna. Were you a recent addition to this panel? Very, very recent addition.
Yes. A couple of days ago, so
of course.
Recent changes.
You're, of course, involved with the Latvia Blockchain Association,
I am
if I'm
indeed.
not mistaken.
Yeah.
We've met last week in Vienna. This guy's going everywhere. He knows everything, and I'm very, very happy and indeed thrilled to welcome you on stage. Please take it away. Thank you.
Can we change seats, please? I just need to moderate, so it will be easier to see you all. So welcome everyone. Today we'll be discussing navigating MiCA, especially from Nordic perspective, but as you already heard, we have representation from Estonia, from Germany, from Sweden here, also from Latvia myself. So we'll look at the broad picture and do some reality check. So since 2023, April 20, when the European Commission passed the MiCA regulation, of course, a lot has changed in Europe legal environment. Many companies have adopted it. Some companies got licensed. Some companies are struggling with getting it there. So we'll try to dig in and really understand where do we stand at this moment, what could be improved. We'll touch upon some things like MiCA 2 that is upcoming, right? So let's try to dissect where we are at this point. I'll start with just a short question, 2 sentences about yourself. You were already introduced, but what your company does and where your expertise really lie. So let's start in this direction. Please.
Okay, I hope that works. My name is Eleonora Pavliouk. I'm a lawyer at Bird & Bird international law firm. We're a full-service law firm, doing quite a lot of things, of course. But one of the things that I do actually is financial services and financial regulations. And MiCA is under this umbrella. I have been working quite a lot, and I've also been a part of a crypto asset service provider, or virtual asset service provider, as it used to be called earlier before I joined the Bird & Bird. Is that enough?
Yeah, that's more than 2 sentences, but almost there. Yeah, please, Anna.
Hi, hello, dear audience. It's a pleasure to be here, and especially with you, Reinis, moderating and taking care of us. MiCA topic is very interesting, but already super boring for lawyers. We will try to make it excited for you a little bit and maybe share some insights and practical cases. So my name is Anna Agu. I'm a managing partner and co-founder at Lex Law office. We're a law firm based in Tallinn, Estonia, and Vilnius, Lithuania, working with international clients and helping them to navigate the legal matters, especially for the fintech and crypto projects.
Thank you. Tim?
Thank you. So my name is Tim Zolitz. I'm the CEO of Cryptoprocessing. We are a specialized provider for compliance and regulatory solutions, more from a technical and data perspective rather than a legal one. But since all our products are based on regulation, we are of course really familiar, especially with MiCA.
Thank you.
Hello everyone, my name is Svetlana and I'm representing company Cryptoprocessing by Coinspaid. You probably ask why I'm here on the stage. Because we are a real market player. We are based in Estonia and we are now in the process of getting MiCA license. And from my side, I would share practical insights from the industry.
Thank you so much. And 2 cents from my side. I'm chairman of Latvian Blockchain Association, also a founder of Unblock Conference that you see beyond my picture on the screen. So that's my short intro. Let's start with reality check. So MiCA has been around for some time. Some countries has introduced it, some have not yet, actually. But where do we stand, like from very practical perspective? Expectations that we saw on the paper versus reality that you see today. You all work from different sides, representing companies, being companies, right, and so on. So just tell me what are the key lessons currently at this moment from practical implementation of MiCA. Tim, maybe let's start with you.
Sure, happy to do so. I think in general, everybody was aware that whenever you have like a pretty new framework, a pretty new law on the European level in the first place, which MiCA obviously was, not everything will be perfect. I think this was the expectation from everybody, and I think this is a fair point and something we need to be aware of, that of course not everything would be great when introducing it first. But of course there are still some challenges, especially from an operational perspective, especially for certain really specific topics. But in general, I think overall, MiCA was a pretty important step, and for many companies, good to handle, let's say it that way. But of course, there are still challenges in regards to asset reference tokens, in regards to certain applicable scopes, in regards to DeFi, and of course, the operational perspective, how to really implement the processes in the day-to-day life, or for example, the different handling in different nations, which we will probably touch upon on later as well, where we see quite a lot of challenges because like the harmonized framework where MiCA should have been, we see at least is a little bit struggling.
Thank you. Sveta, you are representing a company that is probably touching upon this application and so on. So how do you feel? What are the hardest and the easiest parts maybe of the MiCA regulation?
You know that I think that crypto industry, let's start from this point. MiCA regulation nowadays is equal to other financial institutions' regulations. So we have the same regulator who regulates banks, payment institutions, EMIs. So now the same regulator, like the same requirements, I mean like high-level requirements. And me personally, I'm dividing crypto industry into two parts. One of them, it's already regulated by FSA entities who already got licenses from this regulator, and they decided to expand their activities into crypto. So this is first group. And second group, it's crypto companies who were originally, from the beginning, crypto companies, and who is now trying to get MiCA license and to grow until this high level of regulation. And I'm representing like a crypto company who started like from IT guys who saw a lot of benefits of blockchain and decided to build great product. And here for us, it was very challenging to reach this level, because in the reality it's very high level, and for MiCA we submitted 200 plus documents, and it took years to prepare them. And also it was very complicated not only write the documents, but implement that in processes, procedures, and to align in all the companies. Because my background is compliance, and I'm coming from this industry, and I understand the need of that, etc., etc. But we also had IT guys, we had sales guys, and they didn't want to understand that. So it also took some time, and it was for us the most challenging part.
So it's also, you're saying it's also industry, like company adjustments within the company, right? The mindset, how you need to change mindset to be fully compliant company, right?
Yeah, absolutely.
Okay.
To be in mind as a traditional, not traditional, but financial institution, like real, that we are now not playing games, but we are like serious guys on the market.
Maturing industry, right? Thank you.
Absolutely.
Anna, so from you have seen and worked with different clients across different jurisdictions, not only in Estonia, but also, I understand, licensed some companies outside of Estonia in different places. So if you compare these different regulations and different countries' approaches to the regulation, do you see some major differences, how different countries actually implement the legislation? Because it is used to be the one who harmonizes the whole EU. Is that the reality, or are there still major differences?
Yes, thank you for this amazing question. The idea behind the MiCA was the harmonization of the EU market and, of course, the protection of the consumer. I think that we are good with the second part, and we have potential for the improvement for the first part. So in terms of the harmonization, once we are advising the clients in different jurisdictions within the EU for the authorization process for MiCA and other financial licenses, we see this fragmentation in terms of the interpretation, starting from already the pre-assessment application process, expectations in terms of the governance, even the list of the documents is different by countries. So for example, we see several cases when some regulators extend heavily the list of the documents, policies, and the procedure that they would like to see. So in reality, if the company is compliant in one jurisdiction and they basically submit the MiCA application and got approval, they are able to apply for the passporting right, but reality that regulators are having different expectations. And if we are coming back to this initial questions where we stand now, Svetlana divided the market to two categories, and I would like to divide them for two additional categories, because we are standing now in the situation when we already have 186 regulated entities within the European Union, and then there is still a lot of pending applications. So it's not a question how to get authorization, it's a question how to maintain authorization and how to stay compliant. And for many companies, it's a surprise that actually it's not like a short run for the license, but it's a marathon. So you are running a marathon, and once you get approval, it's the beginning of your journey. And you need to have the smart strategy and actually be compliant, and it should be be a long-term vision and priority of the company.
So getting license is not the finish line, right? It's
Yes.
just another beginning.
Yeah, absolutely. Yeah.
Okay, Eleonora, smoothly transitioning to you. Which companies, Anna already mentioned that some companies are struggling more than others and really to understand what it means to become fully regulated. How do you see which ones are those exchanges, are those younger startups that are struggling, maybe some other type of companies that you see the biggest problems with in the industry?
Well, to be honest, I would not say that someone struggles more than some other type. I would say that it's a different struggle, depending on the type. Like smaller companies that either haven't been regulated or registered at all, or have been under the slight VASP regime locally, and they are not used. It hasn't been a requirement to be compliant with a lot of items. So they will be and have been struggling with actually achieving and to demonstrate compliance for the purpose of the application. And exactly, and as you said, once they get the application, it will be the real test after that, whether you can actually live up to what you have promised to the regulator. So they are kind of on a heavy burden under these, all of these requirements, because it's not only MiCA, it's also DORA, it's also outsourcing. It's quite a lot of things that they are facing quite a wall of regulations, actually. And it's hard, both in terms of people resources and money, of course, spent to that. And also they have to run their business. But I also see the struggle with, the structural struggle with bigger institutions, because they, and especially the ones from third countries, because not all third countries actually regulate that, and they entering into the European market actually needs to step up quite a big wall and do quite a lot of stuff. And it's not on the lower level like for small companies, it's on quite high level. Yeah, and the regulators will expect quite a lot from them. It has actually been, an opinion has been issued that they will thoroughly go through all the application, and it will not be accepted whether you have half of your operations overseas somewhere and doing something here and something there. So you will need to take everything to Europe and actually do like really do that in Europe.
Also split
so
the books,
different types of struggle I see everywhere. But also to mention the third type, it's the smaller companies that haven't been licensed, and like Svetlana, you said, like two guys, IT guys, seen an opportunity and actually, well, let's do that. It will be a challenge for them, because when I was thinking through the today's event, I was like, okay, I remember the struggle with PSD, the First Payment Services Directive, when it came and the people needed to apply for applications, and it was not at all that hard as it is today. It was quite a limited number of things you needed to provide. The regulators themselves didn't know how to do that. But things have been evolving and improved quite a lot in terms of regulation and the level of compliance. So what you need to do today to apply for the first time, it's an amazing burden. So three types, very different struggles, and I would say that, well, it's comparable. So I would not point out a single type.
For different entities,
exactly.
But all of them are struggling.
Yeah,
right?
yeah. In my view, yeah, and that's our experience, and that's been quite obvious, actually, that that's the case.
Okay, thank you. Let's go. Please step in.
Yes, here I also wanted to add about like small companies who want to enter the market. It's the one thing, because like we can get MiCA license, and we are applying for MiCA license because we were at the time we were already well-established business, and we had like money, because we are spending really millions to be compliant with MiCA regulation. And this is the first thing I wanted to add. And secondly, I know crypto companies, and I know them personally, and they are really guys whom you can trust, who are like really good players on the market, who had really right values, and they closed their businesses before they got MiCA license, because they didn't have enough resources to maintain the company, because they need to pay salaries, they need to pay for software, for all the providers, vendors, third parties, office salaries, etc., etc. So it's like really a lot, and they close their businesses, unfortunately.
So it mostly leads also for market consolidation in some way, right? Some smaller companies are merging with bigger companies, being bought out, and then even exiting a business sometimes, yeah. Very shortly, and then let's move to the second block of the questions.
Yes, I just wanted to double confirm that we see also this problem in practice, that even it's not a question for the smaller companies, but it's also the medium companies who are well established on the market, operating for 5-7 years, well established in the particular country. They are struggling with getting the MiCA application on time, because we all understand that companies are having the limited resources, and from one side they receive the feedback of the regulator, guys, you need to cut your client base 30%, and of course it might be, I don't know, a less turnover, not 30%, but maybe 50%. And on the other side, you need to increase the amount of the employees, you need to have this local establishments, etc., etc. So all of this is actually creating the questions which are related with the business continuity. Unfortunately, we will see the cases when already well-established businesses are also closing the doors, or trying to sell their clients, or having the separate agreements with the well-established market participants as Kraken, OKX, etc.
Yeah. Immediately, a recent case from Estonia comes into mind, right? Cryptomat, well-established, long-standing company, transitioning their clients into Kraken, right, and so on. Yeah, but let's move to the second part of our questions and let's go to the Sveta. So PSD2 payments and operational challenges. So one of the biggest unresolved questions is about this overlap between PSD2 and MiCA regulation, right? And do crypto companies realistically need double authorization? Because a lot, also in Latvia and many other states, we hear that now the regulator requires double licensing basically to fully operate, to get MiCA license plus ME or plus payment institution license to be really a significant player and use stablecoins and so on. So how do you see this challenge?
Yes, as guys, you participate in MiCA panel, you all know. I hope that if you want to operate with stablecoins, you need a payment institution license to continue operations. And our main business is operating with stablecoins, so that's why we were required to get a payment institution license additionally to MiCA. But you can choose. To be honest, you can choose. You can partner with somebody, and this part can be covered by another party.
Yeah.
But saying from our perspective, it was not like so difficult, because the difference was in several politics that we had to add. And
additional capital, right? But that, yeah.
But we already were in,
Yeah.
like, I'm saying about our experience.
Sure.
It wasn't like this question about us. But to be honest, all these years, I'm suffering that crypto is not treated equally on the market. And I believe that this additional license might help, because it's an issue that we are saying we have the same regulator. Come on, for example, we are in Estonia and we still don't have a bank account in Estonia. It's like, it's a joke. We have like everywhere in the Europe, but not in Estonia. And when we are coming to Estonian banks, we are asking like, but when you are open an account? And they think, no, probably when you get a MiCA license. But I think that payment institution license is only beneficial for us. So maybe I'm not...
At the same time, you can ask a philosophical question. Should you be asked to do basically 2 licenses for doing one sort of thing, working with cryptocurrencies, right? Crypto assets. So, but yeah, that's more theoretical, and maybe let's not go there that much. Let's go to Tim. So, Tim, you work with the companies that basically mostly the companies who already get the license, right? So, what are the major things that you see as the difficult things, especially for external payment providers working with external payment providers? Are there any major challenges of integrating different outsourced players and integrating within other companies?
For sure there is, because not only under MiCA, but in general, if you're like a financial institution, like onboarding critical outsourcing partners, like payment providers, which they are normally, that's pretty tough. And of course, if you're a CASP or a financial institution and choose a payment provider, there are a lot of requirements you need to have in mind. This is even applicable for like smaller services, smaller service providers, because as you know, most of the crypto asset service providers have dozens of different providers helping them to do their operational business. And to most of them, there are certain things, probably most of you all here in the room know this, cool DORA addendums to the contracts, etc. This is of course only one part of it, but especially for the payment, since it's always significant and always important, you will notice in practice, all the clients will ask about your licenses, will ask about your stuff already before the license. So this is really important and probably a good thing for the providers, that they can signalize, hey, we got a license now, to maybe take away some of the burden for like all this individual onboarding, which is normally happening with all the CAS, because everybody has their own requirements, everybody has their own forms to fill out, etc. This is all, pretty hard to fulfill, and of course, from the perspective of CASP, pretty hard to manage, but super important, since we know the regulator is looking into this quite extensively.
Thank you. Anna, back to you. Where do you see the biggest real-world operational challenges when getting that license?
There is a lot, and it's always depending on the business model and the project. But if we will summarize, majority of the crypto asset service providers, if they are by nature crypto companies, they are struggling with the governance structure. Of
Can
course.
you give some examples?
Yes, for example, even finding the proper supervisory board to the company can be a challenge because they need to be fit and proper. There should be absence of the conflict of the interest. If we are talking about the Baltic Nordic countries, we don't have a lot of options. We know each other, and many times we have the conflict of interest. Also, the questions related to the fit and proper of the management board of the companies. Some companies are underestimating the level of the intensively check on fit and proper procedures by the regulators. And for some companies, it's a surprise that some kind of past situations 15 years ago may actually give an impact or on your background. So this is question number one. Ownership and source of funds. It's always a question for the financial institution. Number three is everything around the ICT and DORA compliance that Tim was mentioning. For example, in some jurisdictions, we see that national competent authorities are even asking already the DORA audit reports during the application process. No. And they are saying like, okay, we can talk maybe about the conditional approval, but you need to present it until we will grant you the license. So
can you tell in which jurisdictions is that?
Yeah, it's in Estonia, for example.
Oh, really?
Yeah.
Okay.
So it's really interesting because companies need to combine all of those challenges and create the strategy how they will overcome. Because reality is that if you do not have this strong strategy for the long-term period, it will be very difficult. And for example, even in one application, they asked the company to provide a 5-year strategy approved by the supervisory board. So 5 years, not 3 years. And in addition to the business plan, in addition to the program of operations, in addition to operational plan, et cetera, et cetera. So,
that sounds like an overkill a bit, right?
Yeah, but the reality is that regulators, they would like to understand your business and they would like to evaluate the risks. And once they are giving you approval, they are basically sending the message to the consumers that those guys are compliant, you can trust them. So it's always a reputation of the country, it's always a reputation of the industry, and that's why a lot of regulators are taking the approvals very seriously.
Okay, thank you. Eleonora, with you, we'll move to the next block of questions about supervisory, passporting, and regulatory framework. And the first question, I think, goes into like EU-level policy making and decision making as such, because well, we have heard that some regulators actually do not trust each other. And for example, some companies who are licensed in Malta, let's say, are not trusted to passport their license to, I don't know, French market, for example, or Italian market, right? So can you comment on that? With Bird being present all around different EU states, probably you discussed with your colleagues as well this question, right?
First, a joke, they're envy. That's why. And joke aside, I think the companies who are under this regime shall not be alarmed, because we have passporting rules. They shall be functioning. However, we of course see some issues with that in practice. I think it will become more visible how the European Commission and legislators will look upon that in MiCA 2.0.
Yes.
That's coming eventually, and we have until August, if I remember correctly,
August,
exactly, to answer that, the current consultation, and there will be voices and some questions and some suggestions to that. But of course, we know that Italian, German, and French regulators, they are very strong, and the governments are very strong, and we shall not underestimate that, so I would advise that it is monitored. But otherwise, the rules still apply, and they shall function. But of course, in practice, we could see that certain local regulator in a certain market where you are passporting towards will ask your question, will suggest that, well, you're not compliant here and there. So we'll see. And I'm not a fortune teller, unfortunately, but I would be watchful.
Yeah, that's very interesting, right? With the introduction of MiCA, we synchronized crypto markets across EU in a good way. You can land your crypto company in any of EU states and freely operate across the whole EU. And with these recent statements and from some regulators, I think they're going against the common market idea as such of EU.
But I think the common market idea is, it's a good idea on the one hand, but it's hard to implement completely 100% idea on the other hand. And the reason for that is that even if you go towards regulations from the directive that needs to be transposed nationally, you still implement it somehow. You hook it in the national rules, in a certain setting of rules, in a certain regime, a certain approach that local regulators have. So it's never like the same level for everyone. You hook it in towards something national that have existed for quite a while. There is a tradition, there is an approach, there is a vision of how it shall work, and it shall not be underestimated. So there is a built-in challenge here, and that's what we are seeing.
No. With a new package of EU Commission that they're putting forward, the synchronization of capital markets in EU, right? They're trying to
well, let's see how that
merge
works
it
out.
better. It will be very interesting.
That's another issue, yes, and there are quite a lot of voices who are opposed to that, me included. So let's see how that works out.
Yeah, let's see. There are some good parts and not so good parts, perhaps. Okay, Anna, back to you. So with the introduction of MiCA, what are the still missing parts that are not working well or missing in the regulation, you believe?
Okay, let's be transparent. Current MiCA, it's a basic layer, basic regulation for the crypto market assets in the European Union. We all understand that this is just the basis. We will have different layers on the top. Right now, this European Commission consultation document were presented, and we all understand that MiCA is not covering all, and it's already lacking behind the technology which is developing. MiCA is not regulating directly the DeFi, MiCA is not regulating directly the staking, not directly regulating the market predictions, not regulating lending, and a lot of things. But
Could it be?
Should it be MiCA or should it be another regulation? This is a separate question because I was a part of the MiCA drafting back in 2019, and in the first draft we had also the discussion, should the DeFi be in the scope of MiCA or no? And there was pros and cons. You know, if you manage to regulate it smartly, then it's good. If you will just regulate because of the regulation, we will see once again the fragmentation. The companies will be leaving the European Union, and this is the reality. Because what is happening now, you know, even 3 years ago, if you go to the conferences within the European Union, sitting on the panel with some DeFi guys, they're like, oh, we are out of the scope of the regulation, we can do the stable coins, we can do the staking, we can do whatever we want. And I'm like, okay, guys, it's just a question of time when you will be regulated, and it doesn't matter how you name it, the important is how it is structured in reality, because we can find the responsible persons there, right? Yeah. So this is a very interesting question, and we will see a lot of the discussions, and I hope that this amendments to the law will be smart. This MiCA 2.0, there is a lot of potential, and I think it's needed to bring the clarity. But yes, it's always the situation that regulation is always behind the technology.
Okay, I see you're both shaking heads that it should be regulated, like NFTs, DeFi, and so on. From German market perspective, perhaps there's number of regulated companies, right? And there's probably some DeFi companies as well. And how do you see that? You probably mostly work with the regulated ones, as I understand, but...
Exactly, yeah. So Germany has quite a bunch of licenses already given out. I would say the DeFi market is not that big in Germany, since we are a little bit more traditional and a little bit more conservative. But still, of course, we have some corporates who are in that field as well. For me personally, there needs to be at least somehow a guidance, somehow a framework. If it is within MiCA 2.0, maybe yes, maybe not. I wouldn't be too direct here, but I think there needs to be certain rules. You can't, like you already said, have more or less the same business models, but just stating you are like decentralized or whatsoever and then falling completely out of any regulation is neither fair against regulated companies, because if you need to compete with non-regulated ones doing the same thing, it's simply not fair. And also, if you really emphasize the goal of MiCA, having investor protection, having equal standards, this doesn't make sense to have it completely out of scope. Totally understandable why it was not in scope back in the days. But I think when restructuring MiCA, there should be at least something in there.
So to you, your last comments on this before we end.
Very
like
quick.
What should we improve with MiCA 2?
Here maybe I would say like a wrong thing for guys from DeFi space, but I meet during the conferences, I'm talking to somebody and they are creating their project and I'm asking guy regulators saying, no, we don't need that, we are DeFi. They decide themselves that they are DeFi and they continue operating like without license, without responsibility. My idea that crypto activities crypto has to be responsible.
Mm-hmm. Good comment, and very last couple of add-ons to that for every one of you before we conclude this discussion.
Yeah, maybe just one add-on to MiCA 2.0. I think if you look into the current consultation by the Commission, it's really important to not focus too much on this really specific questions and really make the changes on the structural level. Like you have within the, I don't know, like 60, 70 questions, something around there in these 4 blocks, and some of them are super specific, like should the threshold be 100K more for any type of service or whatsoever. If you get lost in such details, you lose the focus for structural changes like is DeFi included, what about AITs, which is not so well working under MiCA. There are big problems which need to be solved, and I would really like to emphasize to not get lost in the really specific details, which are important, but the other things are maybe also important.
Okay.
I would like to maybe summarize with the following thought that MiCA is complicated, but it's nothing new. The transition period that crypto asset service providers are facing now, the same was with the payment institutions and the e-money institutions, with the crowdfunding companies, with amendments to MiFID, etc. So actually, think about your business model, hire quality people. If needed, hire a good consultancy or lawyers. Think about the cybersecurity and just make the compliance a priority of your company, and then everything will be good.
Thank you. And Eleonora?
And just a couple of last words. I want to second what you just said, because we have seen it before. Payment Services Directive number 1 and number 2, it was exactly the same journey. Something occurs outside the traditional financial institution sphere, and everyone is kind of scared of that. And it's new. No one knows how to handle that, and that's kind of what we're seeing here now. And I hope, and it's really my hope, that this will get us to more acceptance, because that's what we are seeing. And it's a journey. It will not go, it will not be done in half a year or 2 years. It will take some time. And MiCA 2.0 will be the proof of that. And I hope that we will, cure those child sickness and that kind of things. And it will go to the next level where we can actually think broader, think like more innovatively, and yeah. So that's my.
Thank you.
Ending up.
Thank you. And my last thought, guys, also if you are thinking where to land and where to get the MiCA license, choose the countries and regulators which are open-minded. There's very different situations in different EU countries. In Poland, for example, as we know, the MiCA regulation is not even in force yet, so there's no practical way how to even get the license. So Polish companies are coming to Latvia to get the license in Latvia, where the regulator is much more friendly. So just choose and look. The legal landscape in EU is very different, and there are some states that want crypto companies and some states who obviously does not want them. Thank you all to this great panel. Thank you so much for your time, guys, and see you around.
Thank you very much.
Thank you.
It's amazing to get to know you.
Thank
you all. Guys, ladies as well, of course. Many in the audience here. Fantastic. Yes, I will just move away from this. So, whilst they're taking a picture, I will already start introducing someone whose name I am actually able to pronounce, because this wonderful couple of guys, actually guys indeed, coming from DataExpert, are actually from the Netherlands, and they are building a very, very interesting company. Thank you all, thank you all. So, yeah, thanks, appreciate it. So we will hear from no one else but Erwin Heuvelman from DataExpert. Now, they also co-hosted the meetup yesterday alongside Chainalysis and some other entities, kindly. And what is really interesting that I found during my research is that Erwin is a forensic crypto accountant and AML specialist, where he really aims with his work to investigate frauds and money laundering for individuals, companies, and governments. So he helps them, right? And he does many things fundamentally alongside that. He, for instance, provides crypto training to financial institutions and law enforcement agencies. He's a consultant, of course. He teaches even risk management at Nijenrode Business University in the Netherlands, and he is involved with the Netherlands Compliance Institute. So a whole lot of things. Now, about DataExpert itself, and I'll welcome you on stage in just a second. DataExpert delivers a wide portfolio of digital forensics, analytics, and cybersecurity solutions and services to its customers. And its mission, and then I stop talking, is to empower legal, political, and commercial entities to fight cybercrime, fraud, and all sorts of other things. Enough from my side. Please give it up for Erwin Heuvelman from DataExpert. Please put your hands together. Thank you, thank you, thank you. Thank you both for being there. Looking forward to this.
So, before I'm going to tell you why I brought this water pump, because you might be wondering what is this, why did you bring it? Let me first talk about the why. I work at DataExpert, just as the introduction was mentioned. DataExpert, a company working for 35 years, enabling crime fighters, law enforcement, banks, and other institutions that are dealing with money laundering, financial economic crime, and other kinds of fraud. With DataExpert, we have a lot of different solutions based on forensic, cybersecurity, OSINT, and crypto. And my focus within DataExpert is in the crypto compliance. I've been working in the traditional finance industry for about 18 years. First, I worked in audit, financial audit, mostly at Deloitte, and after a while, I transitioned towards the banking industry and working there for 8 years in AML. So anti-money laundering is one of the things I've been focusing on for the last 8 years, and I also noticed from some panels that we need to talk with the banks, and now here we are. Love to talk about how the banking are dealing with anti-money laundering. And I think when I provide trainings to compliance professionals, to law enforcement and other agencies, they always ask the question, what is one of the trends in money laundering? And you can make it very complex, but I might like to make things also a bit easy. So I usually just use examples to explain things. And as you can see here, I brought this pumping device. And why did I bring it? Let's imagine that someone wants to launder money. For example, John has a lot of illicit funds, and illicit funds, we've imagined that the illicit funds are the water inside the tank. And he wants to launder it in an efficient way. He has to go somewhere. He wants to go to a bank and eventually cash out. But how is that going to do it? Now, we all know agentic finance, agentic AI, that's working perfectly for money laundering. Why? Because you can make a lot of addresses in a quick and a very efficient way. So let's imagine the AI agents are literally the pump to creating the pressure. And John is making it ready to really start the money laundering process. So once John is in place and he wants to launder the money, what basically happens when you press the button is just water coming out, right? It's just a little bit of water. I'm not going to do too much, otherwise it's going to get very wet here. And this resembles all the transactions that have been splitted, been merged, been transacted in a lot of very efficient way. And that's what happens with money laundering on crypto as well. I'm going to go back on this device later, because I first want to show you something else. The thing I just explained to you by using the pump device, it's basically the same as here, as you can see. On-chain happens all the way on the left. Is the John, he wants to launder the money. How can he do it? Using the pump system. That's the on-chain system, and he can do it in a very efficient way. By spreading out the addresses, let's say 7 or 8 on this example, but in reality it's maybe 10,000, because it's so easy to build it up. And that is, some criminals think that is a very good way, but of course there are ways to try to get through this and to understand really what's going on. So what happens if John wants to keep on laundering, and that's why we eventually go to the bank, what usually happens is the following. It will go into a cross-chain swap, and I think everyone here is very familiar with it, but usually when we see what happens a lot is it's a stable coins, and a specific Tron is always involved in a lot of cases, and then it might go to Ethereum, so it will change from a different blockchain. Basically, if you're driving on a highway, you want to use the train, you need a cross-chain swap. And tracing through a cross-chain swap is not always easy. Sometimes it's very straightforward, but there are 7 models around cross-chain swaps that are making it harder or less possible to really trace through them. So you're going to need a subpoena in some cases to go through. It makes us slow. It makes money laundering and investigation slow, but eventually you can get there. So once it goes to the exchange, if it's a regulated exchange within Europe, we have MiCA of course, and the AMLR that is coming up. And AMLR, that's going to be in effect full next year, and that's going to have a lot of impact for this. So let's hope that the exchange has all the AML policy in place. Some of them are very good, and some can still learn. Sometimes in my discussions with exchanges, I see that they only trace like 3 hops back. That's not really a lot. You need to understand the pattern, just like John is using. If you don't understand the pattern that John is using, it's going to be more difficult. Let's go to the bank, because that's where the most problems really start, from a banking perspective. If it's, yeah, there it is. So John has a bank account, and I used to work at ABN AMRO or Rabobank for around 6 years. And in the AML programs, we always see that it's coming from an exchange, and then we start to wonder, is this even an exchange? Do we know it? The example in one of the panels with Kraken and Payward is a nice example. And then it's the question, what are you going to do? The problem is, this is the blind spot for the bank, because you're depending on John as a bank. John has to explain what's the source of funds that's coming from the AMLR obligations or the other AML obligations in the past. And John can basically say anything. He can say, yeah, I saw the car, here's my invoice, and because if he would go straight from the pump, from the water, straight to the bank, he will definitely have problems with the bank. That's how he has to make it smaller. The problem is that if we're depending on John as a client, he can provide anything he wants, any invoice, any documents, and the bank might believe it, depending a little bit on how strong equipped, how strongly trained the compliance professional from the bank is. And that's where we are involved as well. We're helping them to get better in understanding the on-chain and off-chain connection. And a bank may use tooling to help to understand where it's coming from. It gives them maybe a dashboard, a green light or anything. And then they think, all right, we have received the documents from John. We have a dashboard that says it's green. So now we're pretty sure we are in the right spot. So what basically John has done with all his pumping system, he just used it to build it up in a very efficient way and making sure it's all going there from all the pumping water into the system. And the bank thinks it's green, but eventually it might just be one big red flag because they didn't really look at what really happened. So the bank thinks it's green, but it's actually quite toxic water what he is actually inhaling and drinking. So the bank is here on a blind spot. This is something we address a lot in our discussions with banks and the clients we have. Because they don't understand always the on-chain connection. I've heard this in a panel discussion. I've heard this in the many discussions, and also at the opening drinks yesterday that was organized by us and Chainalysis. That there is still a lot to learn, and they are eager to learn. But they have to realize that a compliance professional working at a bank needs to understand a lot of things already. They need to understand in the off-chain world, they don't even see it as an off-chain world. They see it as the banking environment. They see it as risk management. They maybe use COSO ECF or other COSO ERM models to build up the risk culture beneath the bank. And then they need to understand their CDD policies, know your client, risk assessment. It's a lot to digest. And then you have to work exactly the way as a bank tells you. Probably it's in a checklist way. So checklist is exchange the good, comes from regulated exchange. We have an invoice, we have supporting documents. That's not all there is. So imagine if you have a compliance professional working at a bank, you're also going to need to understand all these on-chain ecosystem, understanding everything what is there. And that's really a lot. We have to realize that. We have to help that. I used to work at a Rabobank for a while, and at their highest peak they had 5,000 people working at Know Your Client. And there were not so many people working at crypto. So can you imagine how many people of a specific bank, you can see it in the annual statements, are working at Know Your Client? That's really a lot. So my key takeaways I would like you to present. You are at risk. It's maybe a little bit alarming because I feel everybody is quite aware of this, and banks are also quite aware of this. But they don't see how much indirect exposure they have because they have the blind spot. They don't have the on-chain analytics. A lot of banks don't even use it yet. That's all as a big surprise. Knowing how to work with on-chain and the blockchain analytics and understanding the ecosystem is a core competence. It's not something anybody does on the side. So basically you're going to need to unicorn and grow them, but because it's hard to find people that understand all these different aspects of this ecosystem, including the entire banking environment. AI, of course, is always helpful. It knows the terrain. It doesn't know how to navigate, but that's what I would say. Understanding and seeing through all these patterns, understanding that what's happening at each point, you're going to need people involved. So otherwise, eventually you're going to have issues. When it comes to the don't trust the data, what I see a lot in my investigations is that I receive a data export from an exchange, for example, and they're never the same. It's always a big mess of a CSV file or an Excel file, and you have to make something of it. You have to make a pivot table if you're an Excel fan, and that will cost a lot of time. There are very good tools already in place, but even that, it's always good to have the skills yourself. So we can help the people to have the skills and use the tooling, because that's going to be even a lot as well. But eventually, if you know it, it's good to use in different situations. So the green light, I would say, it's not a conclusion. It's something which a bank might need to understand that they have to do more than just using a tool or any other environment. It's not a conclusion. They need to do more. So that's what I would like to give you all. Well, how can we help? We can help with a couple of things. We can help with investigations. We do a lot of investigations for governments, working on on-chain analytics, using different tooling. We help to develop training programs. We already have an e-learning platform coming up for AML persons and also for the non-AML. Because if you have a bank, everybody within the bank has to understand something about crypto. So we have a basic platform coming up, and together with Certify 360 in the Dutch Compliance Institute. So we're happy to help. And also we have quite a long journey as for the training, learning path with a lot of different trainings. And as my last advice, this might look a little bit toxic, but I'm just gonna drink it. And then my advice, don't do anything that doesn't really, you can really trust it. So skål and thank you all.
Thank you very, very much. It was fantastic.
Yeah, thank you.
Proost. Did you bring this in your hand luggage during the flight? Like, how did that work?
I was a bit afraid, actually. Yeah, I didn't bring it. No, I bought it here in Stockholm.
Oh, you did?
Yeah.
Huh? Yeah.
Because I was wondering if I'm gonna bring this in the plane in my carry-on luggage, they're gonna look a bit suspicious.
Yeah.
That's gonna be a red flag. So I didn't bring it now.
Fight some virus or something. Thank you very much. Should I help you with this, maybe?
I'll bring it. Yeah.
Yeah, you manage. All right. Yeah, it's a bit heavy.
It's a bit heavy.
All right. So, thank you once again, Erwin Heuvelman of DataExpert. Thank you for being here and kindly also co-hosting the event, of course, yesterday evening. Now, whilst we take this all, I asked to my kind colleagues from Nordic Blockchain Association to perhaps also take off this. We are going to move to yet another panel where we've had a couple of changes. So, Henrik Westerberg, or Berg, depending on where you're from. If you are here, fantastic, you're here. Feel free to join us on stage. I didn't prepare much about you, because you were a recent addition, but you are the co-founder of Sapio, if I'm not mistaken. And feel free to introduce yourself briefly. And of course, everyone can feel free to introduce themselves also after I've spoken, but please feel free to take a seat. Now, alongside you, we will also welcome on stage Marius Smith of the Ethereum Foundation, if you are here. If you are here, feel free to join me. Now, Marius is the enterprise lead at the Ethereum Foundation, and he was also priorly, welcome, the head of Eigencloud, I believe, and head of EMEA at Eigen Labs, and he also held various positions at Finoa. Now, of course, the Ethereum Foundation doesn't need any introduction. I said briefly. Now, alongside these two gentlemen, we also welcome on stage Marc van Vanlerberghe. Please be welcome on stage from Algorand. Now, Marc is the Chief Strategy and Marketing Officer at the Algorand Foundation, which, of course, was founded in 2019 by the award-winning cryptographer Silvio Micali and supports, of course, the Algorand ecosystem. Last but not least, we have two other people. So first of all, there is John Isaksen of the Stellar Development Foundation. Please feel free to join me on stage and feel free to clap. The problem is I hold this and I can't clap. So please take a seat. Now, John, you are the head of the International Government Affairs and Strategic Engagement, that's a long sentence, at the Stellar Development Foundation. I believe that you've also held a position at Uniswap and also were involved even with the European Commission. Of course, the Stellar Foundation, everyone knows them, doesn't need an introduction either. And last but not least, there is, of course, Candice of Espoir, PR and Communications. Wonderful that you're here. Candice, you are, of course, Candice, you're, of course, you run your own PR agency, wonderful company, cannot do anything else but recommend, and you bring 20 plus years of experience, right, in PR and communication.
The age.
And I believe, sorry, I believe that also importantly, your company is also inspired by tech for good, right? You work with great projects and companies in the space. Very much looking forward to your moderation. Thank you for being here. Gentlemen, and Candice, of course.
Thank you. Okay. Good afternoon and welcome, everyone. When the industry speaks about the convergence of Web 2 and Web 3, the headlines always go directly to ETFs, tokenizations, stablecoins. But underneath all of this excitement, we have a much more important question, a little bit less glamorous, but it's still really, really important, and that is, what infrastructure should enterprises trust for their needs? Because this decision can potentially impact billions of dollars and millions of users. So my name is Candice, as Alex has already introduced me, and for the next 40 minutes, I'm going to guide this discussion to kind of just really understand what institutional grade really means in practice. And alongside these panelists from 3 networks that approach this challenge from very different angles, and also we have, well, you know, somebody who's actually building right now. So I think we're going to have a pretty balanced perspective on this panel right here. I think the introductions have already been done, but just understand that with these 3 networks, you know, they're very distinct architectures, philosophies, and market positioning. And our goal today is not to determine a single winner, rather to explore the strategic trade-offs that enterprises need to know before making decisions that are expensive, complex, and often irreversible. So let's open with a question that I need each of the panelists to commit to one side. And you can't, you know, be on the fence, right? So when an enterprise comes to you to ask which protocol they should use to build on, is your honest answer driven by the technology or the ecosystem? And when I say ecosystem, you know, I mean the liquidity, the distribution, and the developers. So John, technology or ecosystem?
Technology.
Okay, Marc?
I think it used to be ecosystem, but now it's technology.
Technology, all right.
I'm going to say both, just to be
No,
sure.
one side. You're going to commit to one side.
I'll say infrastructure then. Yeah.
If I have to pick, I'm going with ecosystem.
Yay, we have somebody who dares to choose something a little bit different. Okay, great. So let's see how this discussion unfolds and whether it actually reinforces your position and your responses. Taking a look at the current state of play, institutional grade protocols are not a very recent development, right? This didn't start developing and due to a growing influx of enterprise demands. It's been a decade-long baseline. In fact, when I started in Web3 in 2017, I was actually in the enterprise space, and back then the conversation was all about permission ecosystems. And Hyperledger was at the forefront. I actually was working with a company that was building using Fabric. Through the IBM blockchain. I feel like maybe only 50% of people in the room here could remember those days. Were you all there? That's actually not bad, OGs, just like me and maybe some of them. So moving into the permissionless space was very daunting due to the primitive level of understanding of what it actually entails. And these enterprises usually have very high risk-averse profiles. They want security, compliance, privacy. And looking at where we are today, I think it's a massive testament to what has been done in building and improving the underlying architecture. So we can establish that, yes, the industry is technically really sound, but then we have other bottlenecks. So having said that, has institutional adoption gone beyond the pilot phase, or is most of the activity still in the infrastructure building phase? Marius?
Yeah, I can kick us off. I'd say we're probably somewhere in the middle, in that we've gone past seeing only announcements and pilot projects being announced to full deployments within certain parts of the ecosystem and for some specific use cases. I think within institutional adoption, stablecoins probably being the one that's the most ripe, but also tokenized money market funds, for instance, have matured quite a bit, whereas other stages of, let's say, financial innovation and experimentation were still more in the pilot phase of things. But from an infrastructure perspective, we have matured, and I think generally most institutions that you talk to know how to underwrite public blockchains, they know what to look for, and they fundamentally understand what they do and how they operate. So in terms of doing the business continuity analysis and due diligence. They know which questions to ask, and they also have, I think, a good understanding of most of the larger public blockchains that are out there today.
Okay, so there's no more blockchain one-on-one kind of conversations. It's what can be done, what can be deployed, and what is working well.
Depends on who you engage. I think there's a lot of education that needs to happen still within some of these institutions. But for the ones that are more forward-looking and innovative, I think there's a general understanding that's fairly sufficient at this point.
Okay. Yeah. Marc, do you agree?
Yeah, I think if you look at all the institutions that exist, how many of them have actually deployed something at scale? In a blockchain context, is probably a very, very, very small percentage. Amongst those that are most forward-looking, like if you look back a year, maybe a year and a half, I think you could probably count the number of deployments that are operating at scale probably on one or two hands. I think it's very, very, very small percentage. I think you could start seeing now pilots going into production and really, really scaling. But overall, as a percentage of like total, institutions that are doing something, it's still, I think, fairly small.
Does a small percentage actually mean it's bad, or it could also be good?
No, it's good. I think, for instance, like example, like we work with the second largest power company in the world, NL, to tokenize energy, to tokenize solar panels, and so they went through a pilot phase. The pilot phase took a year. And for instance, since the end of last year, they're now fully in production. Anybody can now buy a solar panel virtually and get the benefits from it tokenized without putting the physical panel on your roof. So this is full production scale. And so they learned a lot. Like it took them a year to actually move from a pilot phase to production phase. But so these things are happening. I think it's still not enough of them. We would like to see many, many more of those. But they are starting to happen, I think.
Yep. I also personally believe that mass adoption doesn't necessarily have to be the be-all and end-all. I think niche adoption can also be a very high signal that we're doing things right. John, what do you think then? Are we beyond the pilot phase, or are we still, building infrastructure?
I think it's difficult to add more than we're somewhere in the middle. I do think that we're seeing very positive signs. Using Stellar, that I know the best, as an example, we had a very, very high climb this year of real-world assets that are becoming tokenized. And I do think it's to the point it's the institutions that are using it, which means that the adoption is slower because they are bound by different rules. So I actually feel like it's fine that it's taking a little bit of time because they have specific risks they need to take into account. But at the same time, I think we were around 500 million in February, and we're above 1.7 now in real-world assets, which is primarily money market funds, but that's just on Stellar. So I would say that I think the latest number I saw was like 30 billion in total across the chains, which is still very, very small compared to traditional finance, but it's not insignificant. And it is happening, which I think is the most important thing. Whether institutions have to do like shadow kind of like book entries, but they're still running at the same time, they are actually happening live, which I think is a very positive sign.
That's a very good point. Henrik, you're actually building. So yeah, do you think we're beyond the pilot phase, or we're still muddling around?
Well, in terms of what I think that blockchain and this technology will become, I think we're still all in a pilot phase, because I think that what tokens are, what they really represent is a new function within society that will emerge over time. So for that reason, I see we're still in the blockchain phase, in the pilot phase. But I think this is the moment where things are really changing, and when these new business models are getting into the consciousness of everyone, so they start to understand also with the new AI agent development and all of that, and how that will affect how blockchains will develop.
Sure, great. So I want to zoom in very quickly on each of the specific networks that are represented here, just because I think that there may be some people in the audience that are not completely familiar with all of them. So I'm going to talk about the primary role they currently play according to the markets. These are market-driven narratives, but they are developed from technical realities. So on Ethereum side, it's known as a settlement and programmable finance layer. So arguably, the institutional default at the moment, that may change. For Algorand, well, compliance first, right? We have public sector ESG use cases, identity, quantum readiness. On Stellar, purpose-built payment rails, we have cross-border transactions, stablecoin. And then two other very well-known networks like Bitcoin, it's a store of value, but there are a lot of companies innovating on it, trying to change that. And Solana, which is known for its high throughput execution, so great for DeFi at scale and consumer payments. So these are market-driven narratives, right? It may not be coming from the foundations. This question is for Marc, actually. Are protocols becoming part of enterprise brand and market positioning? Like, does this influence enterprise decisions at all?
So we would love that. I don't think we're there yet. Like, a company will basically announce a deal with Google and the stock price will go up. It's not, a company announces a deal with Ethereum and the stock price of the company will go up. The stock price of Ethereum will go up maybe if the company is big enough. So the same thing for Algorand, of course. So I don't think it's the case yet. I do think from an Algorand perspective is where we start to see strong differentiation and strong pull from enterprises is on the whole quantum narrative. Mm-hmm. Because we've been focusing very heavily on quantum security and we've been shipping features to make the Algorand blockchain quantum secure since 2022. And so we start seeing momentum around that. This is becoming something that is, very much top of mind of many of the enterprise customers, institutions we're talking to.
Algorand got a mention in the Google research paper.
And
right?
Yeah, exactly. And so Google didn't go up and Google stock price didn't go up. Ours went up by 40%. So it's kind of the reverse. But yeah, so we see the pool is coming from there. Coinbase did a release around quantum as well. We were also mentioned as the leader in that space. So this is where we see the pull, and this is where we see Algorand's identity be most prominently in the minds of enterprise users.
Well, Marius, do you agree? As the enterprise lead for Ethereum, right? It's a protocol positioning, something that opened a little bit more doors for you when you're actually, negotiating and speaking to enterprises.
Yes and no. Mm-hmm. So Ethereum is public infrastructure, right? And I think to the point made over here, usually where most institutions are most comfortable starting, right? So that's why you see 60% stablecoin market share, 60% tokenization market share for Ethereum specifically. So it is the playing ground that most institutions are most comfortable with. It's the chain that's been around the longest and has been running, say, almost 11 years now, uninterrupted. We still see a lot of these announcements coming out where institutions will, say, pick a launch partner, for instance, and I think over time we'll probably see less of that as incentives dry out and as we kind of converge around certain standards that are emerging. But I think it'll take us a little while before we get to a point where there's no announcement whenever someone picks a chain. But hopefully over time it will be a very natural thing to just go and deploy on whatever blockchain you're most comfortable with, and it won't have that same kind of announcement effect.
When you say comfortable, is it because they know about it or because they've done a lot of research and due diligence?
You can make the comparison to the internet, for instance. So you can say everyone engages with the internet, but they don't care that they're using TCP/IP, for instance. And I think the same way about public blockchains is that eventually you'll get comfortable enough to interact with, say, Ethereum, for instance, and so you don't need to. You're not taking a decision on a cloud provider, for instance. You're using public infrastructure, and I think that's the end goal that we need to get to.
Henrik, you're building on Ethereum. Did the positioning of Ethereum itself matter in your decision?
Yeah, I mean, it matters for decentralization, the level of decentralization, but it's also a lot with the liquidity. So what we're building is a way to do decentralized decision making through prediction markets and asset management at the same time. And I think, that's a new field that is very niche right now, but we think that over time, using prediction markets for things that are more useful because the signal is more trustworthy if you have to just put money behind your decisions as well. And I think that for Ethereum, they have done a lot of innovation in DAO governance and that. So that's one reason why we want to be there, but it's also for the liquidity, of course.
Okay. I want to move on to talk a little bit about use cases. So just for simplicity purposes, I think we have two broad categories. So we have the finance-centric focus use cases and the non-financial public sector use cases. And I think that a lot of the focus has been on finance-centric use cases because that's where the loudest institutional signals have been. But I feel like that's only a really narrow slice of the pie. We have a lot of other meaningful blockchain deployment that are non-financial. We have supply chain tracking, we have energy applications, other public sector applications. I think I remember that voting was one of the very first pilot use cases really back in the days. So I'm going to come in a little bit hot here on those who are very focused on finance, financial services, so stellar. Okay, so I just feel like the industry seems to be avoiding very harder enterprise problems by concentrating on financial use cases, where speculation and liquidity could actually mask adoption gaps. Do you agree?
Sorry, come again, the last one?
Is the industry actively avoiding solving for harder enterprise problems by focusing on financial use cases where speculation and liquidity can mask adoption gaps?
No, I don't think it is. I think, I think we've come to a point where every chain cannot be the everything chain. And I think, to your point, a lot of the activity, a lot of the innovation has started from financial activity, being the first adoption or the first use case. I think there are others also on the panel that are offering very, very different use cases using blockchain technology. I think the stuff that we just mentioned before, some of it is on the other end, it's slowing down. I think Stellar, one of the things which has been our kind of challenge is, of course, that we, from the beginning, were very focused on this use case that was maybe not as sexy as some of the stuff where you could add smart contracts, you could add like constant swapping or lending or reusing your collateral for something else, which means that activity has been slower in adopting or building out, and a community has been slower. But I also feel like now we're seeing the inverse of that. We're seeing that as institutions that want to solve the tough, difficult problems in finance are also coming on chain with Stellar. That means that we also see a different kind of activity coming from developers that want to build. Not sure if that's exactly what you asked, but...
Yeah, but okay, so do you think that by choosing to actually build, say, the easiest commercially viable sort of application, like that is a deliberate choice to show that, yes, we're there?
Yeah. I mean, it starts with payments. For us, it was, I wouldn't say that it's easy, but it's definitely a use case when you look at cross-border payments and remittances, and just shake your head that this is still 6-7% in most jurisdictions to another jurisdiction. Then that's like something that's very ripe for disruption, and something where this technology fits very well. So yeah, that was definitely a deliberate choice to try and solve that.
Well, Algorand is going the other way. They're trying to do things that not many people have the bravado to do so. Okay, so given Algorand's specialty, what does institutional grade actually means for, say, a health system, a government agency, or say, a global manufacturer?
Yeah, well, I'm maybe going to add one thing to what you said, is that I think what the core use cases that most kind of foundations, I think, strategically focus on are more kind of financial in nature, because that's where the kind of the biggest bang for the buck comes, and that's where the value actually gets driven on a blockchain. If you do like you put a carbon credit on a blockchain, what is the value of a carbon credit? Is very, very, very small. It may be very important for the software company that uses that carbon credit, but the value to the blockchain ecosystem is quite small. So I think that most of the blockchain foundations are really strategically focused more on the financial use cases such as tokenization and payment, which is also where we are. But that doesn't mean that other enterprise use cases are not possible. And specifically in our case, we have, but those enterprise use cases are very much driven by the specialists in those use cases. Like, you know, at the foundation, we can be specialized in healthcare and in ESG and in identity and in all of these different verticals, right? And so that's where I think the ecosystem of enterprise developers come in, who have figured out how to solve a particular use case, and then use the blockchain as a component of that use case. And so we have a lot of enterprise developers that are focusing on ESG, for instance, on identity, on healthcare as well. And so from a blockchain perspective, what those software developers are looking for, not the enterprises, because enterprises don't really care too much because they're dealing with the software developer, right? What the software developers care about is that, of course, that the chain is reliable, doesn't go down, that there's instant finality, that the cost is low of the transactions, that the support is there, that all of the tooling, developer tooling is easy for them to use, so they can use Python and TypeScript to actually write their smart contracts and don't have to learn something exotic that they don't necessarily are focused on. So those are the things that those developers care about. The enterprise is really, actually, and when you look at many of the websites of those enterprise developers, you'll see that they will not mention blockchain at all. They try to kind of hide it and slip it under the carpet.
Yeah, but that was always the goal, right? For the blockchain technology to kind of just, you know, function, you know, like the Intel Inside, you know.
Exactly.
That was always the goal.
And so the over-financialization, I'm not sure that's the word, but the over-financialization of crypto makes it such that crypto has gotten a really bad reputation with many institutions, especially like enterprises, right? So now software developers are basically hiding the fact that this is blockchain based. They're taking the advantage and they're using a blockchain for what it's good for, but they're not going to say, hey, we're on Ethereum, or hey, we're on Algorand. They're just going to deliver their added value to enterprise customers, and blockchain has just disappeared in the background.
Well, I would argue that a lot of the bad reputation that happens in crypto, these are traditional financial problems like fraud and risk and scams, everything like happens all. And interestingly, you know, like if you want to look at databases that got hacked, you know, with our health information, you know, I live in France and I'm also from Australia, and the amount of my data that has been hacked and sold, and it's amazing, and none of them are actually financial related. And then nobody seems to, you know, kind of like clutch the pearls at that, and it's just, everyone just seems to be resigned at that.
But the funny part, you talk about fraud, right? The funny part is I had a conversation with one of the big cloud providers just a couple of days ago, and they actually want to move LLM purchase to token-based, X402, prepaid, pay-as-you-go, and not do Visa and MasterCard. And you know why? Because there's too much fraud on Visa and MasterCard. So the whole idea that, like, you know, crypto is all fraud, it's the opposite. Like the fraud that merchants, big merchants see is on credit cards. And that's what they're dealing with, the chargebacks and everything that's going on. And basically crypto eliminates all chargebacks. There's no chargebacks on crypto. Mm-hmm. And so the whole narrative, actually, as an industry, also have to do better at kind of, you know, defending and positioning crypto in the right way. We are basically a solution to fraud. We're not creating the fraud.
Yep, absolutely agree. I want to touch a little bit on regulatory, even though, you know, this is not supposed to be a regulatory panel. There's a lot of them floating around, including roundtables. So obviously, you know, John is our panelist expert here. Stellar has deep penetration in emerging markets and cross-border payments. You know, operating across jurisdiction with wildly different sort of regulatory postures. For an enterprise launching a global product, can selecting a protocol with, you know, a stronghold in more permissive jurisdictions actually be considered a valid strategic consideration? So essentially I'm saying, is regulatory arbitrage part of the strategy?
Not for us, but so I think two things here. I think the prevalence of Stellar in a lot of African countries, Latin America, Southeast Asia, I think that is not based on the use cases of payments or remittances being more permissive there, or the regulatory community being more permissive. It's just the fact that that's where there is a market fit. If you try to do cheap payments on Stellar in Sweden or Denmark or most of the West, the use case is not as strong because the existing payment infrastructure is near zero for most users, most retailers. So I think that's essentially why we've seen a higher uptake of that specific use case. That being said, there's definitely something to say for once you are used in one jurisdiction, and if you are in a jurisdiction that is closely observed by other jurisdictions. So say we have something in Indonesia, and Indonesia tends to influence a lot of the surrounding countries, or we have something in Malaysia and they look at each other. That makes it easier when an institution wants to go to their regulator and say, we want to build on Stellar, are you okay with that? So there's definitely something there. Now, it is in no means like a compliance shortcut or anything, because it's very, very different depending on the financial product you want to, or the use case that you want to build on a chain. So payments is probably the easiest of those, but as soon as you get into like MMF or tokenized assets and you try to say, okay, but we're in all these great countries and economies in Asia, then you come to Europe and it's completely different. So it's definitely a signal, but I would say, I think from my observations, I think the institutions building or issuing on Stellar is probably a stronger kind of like signal than which jurisdictions we're actually in. Okay. And as you've seen in the past, there has been different use cases or different companies building on multiple chains, but trying to kind of like say, but we are here, so we can also just be there, which doesn't always work. Yeah. So I think from a chain perspective, we're probably, I mean, that's the software provision, so it's where there's the least regulation. Yeah. But yeah, that would be my...
Yeah, I know a lot of regulations changing even here in Europe with MiCA, so I think everyone's still adopting a wait and see. I know, Marius, you're not a regulatory expert, but you have conversations with enterprises. Does the regulatory arbitrage, or is this a huge consideration, or is something that they will leave to the experts once they've selected a protocol?
So it's not a problem for us because we're operating globally distributed, permissionless, incredibly neutral infrastructure, right? So at the infrastructure level, and I think that's the case here for every one of us, you don't face any, say, regulatory uncertainty in that sense. So everything happens at the service provider application level to the point made over here, right? So on that level, there's definitely a lot of arbitrage happening. Depending on what you're launching, you may choose that one jurisdiction is more ripe, or let's say more accommodating of whatever service you want to provide. So on that level, yes, absolutely, there is some arbitrage happening still today, and will continue to happen until there is regulatory cohesion globally, which we will probably never get to, right? So I think that's happening and will continue to happen for the foreseeable future.
Henrik, your building, is that top of mind for you? Are you concerned? Are you scared?
Well, yeah, I mean, of course, that's something we have to think about, but it's also something that can be quite hard to understand when you're building a fully decentralized protocol. What does fully decentralized really mean? And also with this counterparty risk, we're solving it in another way, so we're relying on people making predictions in a decentralized way. So we are we're not managing anyone's money because everyone is acting in their own self-interest in this game that we are building. And that is quite hard to describe and understand. So these new business models, these new algorithms and mechanisms, I think to get to the next step in this development, the regulators also need to understand the mechanism design behind these algorithms to really incorporate them into the regulation.
I want to move on and talk a little bit about friction. And I'm going to start off with Marc. So much of Algorand's institutional credibility comes from public sector pilots. And it's still in the process of attracting, like the Fortune 500 scale kind of enterprise commitments. Given that your credibility rests on this type of, public sector pilots, which is actually pretty vulnerable, I think, to governments that could defund or deprioritize, especially given the macro uncertainty in the world right now. Is this something that you consider really high risk? Because then it shows that there's a lack of market gravity that could actually help drive a broader enterprise adoption for Algorand.
Yeah, so when you say public sector, like in our view, we have been kind of designed from the start as an institutional grade kind of blockchain with all the things that we believe institutions will need, like finality and stuff like that, instant finality. I don't think we've ever been focused specifically on public sector alone. Public sector is a component of it, but institutions are much broader than just public sector. And then when you look at the type of customers that currently use Algorand, they really span a wide range beyond public sector into enterprises, financial institutions, and stuff like that. And so I gave you the example of Enel, for instance, which is like one of the largest energy companies in the world that is using us at scale today. Like we work with United Nations, UNHCR, the World Bank, World Food Program to deliver financial aid, for instance, to Afghanistan. Currently, 30% of all electricity bills in Afghanistan are paid for using the Algorand blockchain. That is, as much scale as you can imagine, right? And so we have examples of those types of deployments which are absolutely not pilots, but are really operating at scale.
So you're saying that actually when macro uncertainty happens, these are challenges that Algorand is actually trying to solve?
Well, I'm not sure it has to do with macro, but like in the case of it, it's very much like what you said, right? It's very much use case driven, right? So in the case of, for instance, Afghanistan, there is no proper banking sector. 80% of the users in Afghanistan are unbanked. And so in the same way as in Afghanistan, people skipped to fixed telephone. They went from no phones to mobile phones. The same thing is happening with financial infrastructure. They're skipping from cash to blockchain-based account, and there's no banking step in the middle. And so that is driven by, I think, the core infrastructure that exists in those countries, or the lack of infrastructure that exists, that opens up an opportunity for blockchain to kind of come in and fill the gap.
Okay. Marius, the Ethereum Foundation is arguably the most better-tested public blockchain in this space. But there is a noted disconnect between long-term institutional builders and short-term market sentiment. I know they're supposed to be separate, but I think enterprises are, finding it a bit difficult to kind of just completely separate, compartmentalize that. Because, we have all these board approvers, treasury committees who are sensitive to, say, price movements, ETFs outflows, and negative headlines. It's just, it is part of life. It's what, they do. They read and then, they look at reputation. So what concrete steps is the Ethereum Foundation taking to close that perception gap, especially with what's been happening over the last 2 weeks? For enterprises, that's what I mean.
We should distinguish between Ethereum, the blockchain, and the foundation, perhaps. So I'll make that distinction first. So the foundation itself is a steward of, say, the protocol and the ecosystem, but doesn't necessarily represent ETH, the asset, right? So there's a lot of advocates in the Ethereum ecosystem that promotes and talk about, say, value capture to ETH, the asset. And while there can be a correlation between price and infrastructure adoption, I don't necessarily think that that's actually the case today. Many institutions globally deploy on Ethereum because it is the most battle-tested network, and will continue to do so irrespective of the price of ETH. So I don't necessarily think that there is a lot of hold in those claims. And in fact, I think we've never seen as many deployments on Ethereum from an institutional perspective as we do today, right? So as we talked about before, I think the convergence, if you will, between the two worlds is very present today, and I don't think that market sentiment necessarily reflects where institutions place their bets.
Okay. I definitely have a lot more questions about that, but then we need to close the panel. So we're in the last, 2 minutes we have? Yes? Okay. What needs to happen? This is for everybody. What needs to happen in the next 12 months, whether in your specific network or whether in the industry in general, for us as a whole to say that, we have truly reached mass enterprise adoption and the enterprises are actually benefiting from what we have to offer as an industry. John, you want to start off? What needs to happen in the next 12 months? Yeah.
In 12
Do it,
months.
come on.
No, but I would mention 3 things. I don't know if it's going to take 12 months, but I think some kind of regulatory clarity. It doesn't need like full approval, but enough that whoever is deciding in a regulated institution which chain to use, they have some sort of framework for actually doing that. So they need to understand, they need to know, which some of the panelists have mentioned, they're getting better at it, but they need to have something to hold that up against. That has to come out from governments. I think number 2 is probably that the institutions themselves need to be ready. They need to then internalize this. They need to learn how to choose a blockchain, like they're risk profiling other vendors when they're choosing them. I think that is also key. And then I think something has to happen around interoperability, but that's not a 12-month thing.
Yeah. These are points that we've been really going at for the last, I guess, 2-3 years.
Yeah, I think the point about regulation, unfortunately, everything that I come to a conference in Europe, it tends to be the topic of conversation tends to be regulation.
MiCA.
But I agree with you. So regulation, specifically in the US with the Clarity Act, I think is quite important to unlock some of these opportunities. Specifically, I think on the financial use case side. I think on the enterprise, non-financial use cases, I think it's less dependent. It's less dependent on that. On the non-enterprise use cases, I think crypto has a bit of a marketing and brand problem that I think needs to be addressed, to position it a bit differently, not as the industry for fraud and speculation and meme coins. I think we need to get more serious than that, and I think we all as an industry have to do a better job at positioning crypto kind of in the right way. But I also think honestly that I think enterprise adoption is not going to reach like a tipping point and suddenly everybody's going to jump in. I think it'll be a slow progress. Slow, hopefully, but steady progress. The reality of the matter is, I think that many of the enterprises are currently much more focused on AI than they are on crypto. Although I do think that crypto has a role to play in that context, specifically around being a trust anchor. That's a whole different conversation. But I think it's going to be a gradual process. I don't think we're going to hit a tipping point where suddenly everybody's going to jump in.
Sure.
Yeah.
Marius?
I realize the panel has been super spicy, no, I won't say anything super spicy, but
yes, do it. I would love that. I was trying with the friction question.
So one comment here, maybe. I think generally, I don't think that the perception generally, if you go and speak to institutions, is that blockchain networks are bad and meme coins and all that stuff. I think we're definitely past that point where all these institutions acknowledge that we need to understand this technology, and we need to wrap our hands around how we want to navigate blockchain ecosystems and infrastructure generally. So we're past that point. I think to your question, I think the next 12, 18 months, what's going to be very key is to make sure that all these institutions are supported in the best way possible so that they can all move to public environments. I think it was JP Morgan downstairs earlier today said that that's ultimately the end goal, but there's still a bit of a gap that we're looking to bridge now. And I think that is getting everyone comfortable with the infrastructure, helping them understand what it means to operate on public blockchains, and getting to some standards, both technically and regulatory, that helps us get there. And I think the financial rails of the future are being formed and laid over the next kind of 12-8-month period, and it's going to be very important to make sure that we help all these institutions and engage with it in the right way.
Okay. And Henrik, last but not least, what needs to happen in the next 12 months?
Well, I think that bigger institutions and so forth should look into also new and novel protocols and think about how can the future change? What can it look like in 5 to 10 years from now? Might be totally different protocols, might be totally different business models. So if they could go in early and help develop and become a participant in the ecosystem from a very early starting point with new projects like ourselves, I think that could be a way forward to really prepare for what's coming when everything's going to change with the automation that's happening in the next few years.
Yep. So future-proof and be ready for change. Yes. That's basically it. All right. Thank you so much, panelists. Thank you so much, audience. I hope you enjoyed it. I wanted it to be a little bit more spicy, but we're all very well behaved here. Thank you for your time.
Thank you very, very much, everyone. Gentlemen, Candice. Yeah, it was a little bit spicy. Thank you very much. You said in the beginning it was not going to be glamorous. Now, I think it was glamorous. Not in the last place for your shoes, Candice. I thought my shoes were cool, but yours, they stand out even more. Now, let's see if someone in the next panel also has silver shoes. I believe not, but they surely have lots of other beautiful things to share with you. Now, the next panel is actually one that I'm really looking forward to. We'll be discussing the global race for innovation versus regulation, having people even over from the US. Very, very cool. And the Netherlands once again, and from Bermuda, lots of interesting spots. After that, we have another keynote, kindly provided by one of our sponsors. And then after that, something else very, very cool that you should stick around for. That is, of course, the pitching competition, which is going to be epic. Now, to the topic. If we can move to the next slide, slowly, slowly. In the meantime, whilst I'm speaking, I will already start introducing with my beautiful lengthy introductions the next speakers that are going to join you on stage. If not, I will just click on the next slide myself in just a second. Now, first of all, the moderator of this panel is actually someone from the Netherlands called Mauro Lorenzo Halve. Please be welcome on stage already. Please put your hands together and welcome him. Now, Mauro is actually the chairman. Please take a seat wherever you prefer. Mauro is actually the chairman of the Dutch Crypto Industry Association, VBNL, and is also a board member at 2Tokens, a co-host of the Crypto Cast, and you worked at MDEX, if I'm not mistaken, right? Yes. VBNL is the association that everyone in the Netherlands knows since 2015, and you really provide a lot of knowledge and feedback for governments about crypto and blockchain and, of course, Bitcoin. Now, alongside yourself, Mauro, we also welcome on stage Christos Efthymiopoulos. Please, I've practiced that one. Please be welcome. All the way from, are you coming all the way from Bermuda? You flew in? All the way from Bermuda, that's fantastic. The deputy director and the supervision fintech, to some extent, it was like between braces, at the Bermuda Monetary Authority, where he has worked for the past couple of years, and you've also been with the Malta Financial Services. And of course, the Bermuda Monetary Authority, this is important, regulates, obviously, Bermuda's financial services sector. Now, then we have also Hadley Chilton. Please be welcome on stage from a very, very interesting company right now that is based out of London. Now, Hadley is currently a partner at Cork Gully Asset Managers. Sounds very, very interesting what you guys are doing. A little bit mysterious as well, actually. So it's an advisory firm and portfolio manager specializing in restructuring special situations and fund value recovery. Lots of other things that can be said about that as well. Then, of course, we have Tommaso let me have a quick look. It's okay. Now, I live in Italy, man. I just wanted to check that if I have written that properly. Astasi. Okay, Tommaso Astasi of Blockchain for Europe. He is a policy director there, actually, where he leads the secretariat of the association, which is obviously a Brussels-based lobby group representing the blockchain and crypto industry at EU level. And last but not least, we met in Vegas just a couple of weeks ago, Jacqueline Cooper of Dara. Please welcome her on stage. Now, she has a very multifaceted background as well, spanning law and much other things. Very, very briefly, she is a blockchain attorney at Cogent Law Group, and she created Blockchain Legal Institute, which is a very, very interesting centralized resource for the decentralized community. She is also a micro-influencer, even a podcast host, and she's also leading the Maryland Blockchain Association over there in the US with their flagship conference happening in July. You should definitely join that. And last but not least, coming to the point now, you're also the Director of Legal and Communications at DARA, which is the Digital Asset Regulatory Authority. Thank you all for being here. Scusami che non ho detto bene il tuo nome. Ok, benissimo, grazie. Sì, I saw that.
Wow, thank you for the great introduction. I think the sound is good from the mic. Perfect. All right. Well, I think this is a great panel, not only for the title, but we have such a diverse range of jurisdictions, of roles. We have an authority, we have legal practitioners, insolvency law. You've worked on a number of crypto insolvencies as well, and the policy director from the Blockchain for Europe. Well, maybe to start with you, Tommaso. Well, maybe to set the stage, I don't think MiCA needs an introduction, of course, but we've had a transitional period ending here. We're, well, 2 years on the way. I think your work for MiCA has started already before that. In the US, we've seen Clarity, we've seen the Genius Act, 2 bills trying to do the market structure there. In Bermuda is actually the first framework already in 2018, if I'm correct. Perfect. And well, you know all about the UK FCA's new attempt as well. Maybe they learned from both sides of the pond. Well, we're going to get into that. But Tommaso, first from you. You worked on MiCA in the trenches of the lobbying efforts. I did a lot of work on the implementation side, but you already did it well. Well, the first people here might have not seen the first drafts. How was that? How was that process? You spent time in Brussels, I assume?
Yeah, so indeed Blockchain for Europe is an association based in Brussels that was created exactly at the moment when the European Commission started thinking about blockchain regulation, right? This was 2018, the first time that we saw blockchain mentioned in one of these documents from the European Commission, basically with the intention of, we need to make the most out of this technology. There was an understanding that this was a disruptive technology that could really change a lot of things. But of course, from a very European perspective and approach, the first thing that we need to do is regulate the new technology, right? So first of all, we started talking about how do we regulate this crypto asset industry. And that's when MiCA was proposed. And that's when Blockchain for Europe was founded as well. And so we have been, as you said, in the trenches of those discussions. It has been a very complicated process, nonetheless, because we are in a situation where in the European Union we all understand, at least on paper, we all understand the power, the potential of this industry, but also the great opportunity that we have in the European Union, right? After losing the so-called Web 1 and Web 2 races in the European Union, there was an idea that we could finally win something. We could take a lead in the Web 3 space. And again, first of all, let's regulate it. This was the idea. Now we're going to talk today about whether this was a successful idea or not, if it puts Europe on the right path. But for sure, it has been a very interesting process because, again, we're coming from a very new industry. We're trying to represent it. We're trying to advocate for what blockchain stands for decentralization and all of these processes. But we are obviously doing that with people that have no idea about all of this, right? People in Brussels, the European Commission representatives a bit more, but then definitely the European Parliament, being elected officials from many different areas of Europe and of expertise, they really don't know what we're talking about. And so it's a lot of education that we need to do. It's a lot of efforts where just to get them on the same page, just to understand what they're talking about, so that then when they are called on regulating this technology, they actually do it in a better way, right? So again, we're going to talk about whether it was a success or not, but at least this is what the European Union intended to do with MiCA.
Yes. And in that day and age, I assume that it was actually much harder than it would be in doing it now. You said about the expertise was lacking, but were they also really scared on crypto is this scary new thing, we want to regulate it? Was that something you encountered a lot?
Very much. It's that's the main problem, right? Is the misconceptions, the misunderstandings that people have around crypto technology, where they form their opinion based on what they see on the news, and especially as we all know, until a certain time, the news around cryptos were all about scams, were all about illicit ways in which crypto assets were being used, and so that's the kind of idea that's kind of cemented in their minds. So our work is really to deconstruct all of these preconceived ideas that they have, talk about what is blockchain, what is a wallet, what is a crypto asset, what is an NFT, and once you do that, once you're able to showcase to them, like concretely speaking, what we're talking about, that's when you are able to get them on board, to make them understand that what they're doing is really important and that they need to do it right.
Did you also feel that, despite your lobbying efforts, that also the banking efforts were probably contrarian to what you tried to accomplish?
Yeah, so this is also an anecdote that I like to mention, but the fact that is when we started lobbying for the blockchain industry, we talked with the European Commission, and the European Commission told us, well guys, the banking sector was here 2 years ago already. They were already lobbying against the crypto industry, and so that's also obviously contributing to forming these ideas, preconceived ideas in the minds of regulators. So yeah, we were late, I guess, but we are doing as much as we can to close that gap and bring this industry in a better position.
Very interesting. And I think the UK chose a totally different route in implementing the regulation, right? Do you, Hadley, think that that divergence is a competitive threat, or is it more something that we could also learn from in that perspective?
Yeah, I think UK has been diverging from Europe for a few years now in many ways. But I think a couple of people have mentioned here already that we're moving back to harmonization of where it makes sense to harmonize. I think one of the problems is, on other panels we've also mentioned that hegemony of US control via stablecoins and getting regulations out early. I think a lot of jurisdictions are now looking at the US and saying, we've got our regulation, but how are we going to get all that US business? Frankly, that's where all the customers are at the moment. So the UK, I mean, you probably heard that we started off with things like stablecoin caps and limits. Now, in regulation, that just looks like somebody's panicked, not somebody's sat down, thought, engaged with industry, both TradFi and blockchain industry, and then come up with a sensible solution. It just looks like someone's panicked and gone, we need to put a lid on this, but we can't completely push it out. And there'll be tourists today, and believe me, the sunshine in London, who will be looking around all of these 500-600-year-old buildings, many of which are to do with the beginnings of international trade, banking, finance. And they would probably, if they're thinking about crypto, not be able to quite believe that the UK is 15 years probably acting after it should have done. It's incredible. But they're running, that's hit the news, they're running now, they're catching up, and frankly they've also got the overseas territories of Cayman and BVI, who again have beaten the UK, the mothership, by about 10 years. They're already up and running. So,
and are they going to make up for that time by looking at all the differences that are now there? Do you see where they get their inspirations from?
I think you've got to regulate, each country or group of countries has to regulate for their own market and look at their own market, but they've got to see their market in the global context. If you want to be trading globally, which is the way trade finance happens, all sorts of trade happens globally, you've got to not only look within, but also how is that going to interoperate with everybody else's regimes? And are people really going to want to deal with you if they're sort of going through multiple processes that are very difficult and in some cases nonsensical? You've got to be very refined and robust about engaging with industry about how we can regulate certain industries in a sensible way, in a way that works, where friction is as low as possible, but it's also robust enough to deal with the rules of the game, and also, from my perspective, quite often having dealt with liquidations or fraud investigations, just having the laws and the courts and the systems to be able to trace assets and bring them back in and hold people to account where they should have been held to account.
Yeah, in your expertise, will they do a good job?
I think one of the problems is thinking that regulation or even having a Big Four auditor could be the silver bullet to solving anything that goes wrong, good faith or bad faith. And of course there are multiple big name situations. FTX is the obvious one in this room, but we've got Wirecard, we've got all sorts of others. They weren't really a factor of, oh, we didn't write enough regulations, we didn't restrain business enough. It was people not doing what they should have done, not thinking about what they should have thought about. In very broad terms, the regulations were there, they were just completely ignored, both by participants and the regulators. So it's really holding people being able to document and hold to account sensible thought process of how things are managed and how they're regulated as well.
Absolutely. Christos, what do you think the UK will do compared to Bermuda? Will they do as good as a job as you did?
I'm a bit biased, so I cannot really respond to that. But
let me rephrase then. What will they if, in your opinion, what should they look at from your frameworks that could work in the UK? Because I think I agree, you have to mention for your market, for your audience, for your jurisdiction as well. Yeah.
I'm going to echo that point. So let me start with that. What works for one jurisdiction doesn't necessarily mean that it's going to work for another jurisdiction. And it's not so only what you should do, it's also what you can do. What are the existing laws? How is the legal architecture designed in a specific jurisdiction? What will allow you to do? Just to give you a bit of an example of how DABA is structured, under the Digital Asset Business Act, which came into effect in 2018. So now we have 8 years of supervisory experience. It is a principles-based approach. This is what it adopts. It has been future-proofed when it comes to the design of the framework, and it has been future-proofed in 3 different ways. One, when it comes to the principles-based over rules-based, which means that it gives you more flexibility, more adjustability, in line with the realities of the emerging trends that you are noticing in the industry. And we are seeing emerging trends every other week, actually. The second is the type of products and services. If you see the digital asset definition under DABA, it's unlike MiCA, unlike European legislation, unlike other pieces of legislation, it's not of residual nature. It's whatever asset leverages DLT, then it would qualify as a digital asset. It may also qualify as something else, in case of a tokenized investment, for example, a tokenized equity. And when it comes to the services, it is also quite broad. Apart from the explicit list of activities and services, you have a custodial gold provider, exchange, spot derivatives exchange, lending and borrowing. We have other activities. We also have what we call a catch-all, the digital asset services vendor definition, which captures any type of intermediation in relation to digital assets. So we have a little bit of history there on how this actually helped a lot when it comes to updating the framework on an annual basis. But this is how it's structured. And the third pillar of future-proofing is the type of businesses that it captures, in the sense we do not cater only for mature entities. There are two. We have one full license class, and then we have 2 types of sandbox license classes, which is the Class T, the testing license, and which is for pilot or beta testing, and the Class M, which is the modified for a license. It's for scale-ups. Because what we saw is that innovation does not come in one size. It comes in different sizes. So this is the approach that the legislator took at the time, and we saw that it works. And I know that we're talking about the design of the framework. After 6.5 years in Bermuda and 3.5 years in Malta, what I will tell you is the implementation, that it's a completely different animal that needs to be really, really considered.
Yeah, it was already in the panel today as well on the MiCA side of the implementation. Yeah, maybe one follow-up question, because I did read that in Bermuda, the law is reviewed by design on an annual basis. And now we currently have MiCA coming up with a review. Well, we're already 2 years in the making, and I know for a fact a lot of EU reviews has been announced, but some have never occurred. I'm still waiting on the AMLD5, actually. Is that agility viable for larger institutions as well? And does it not impose maybe a legal uncertainty for businesses, or are the businesses actually really fond of this flexibility?
Actually, there is a lot to unpack in that question, so let me
Sorry, yeah.
take it. No, I love that question, actually. One, it was not designed to be updated on an annual basis. As a matter of fact, it has been designed to be as future-proof as possible on these 3 pillars that I already mentioned. But during implementation, which I mentioned before, it's a completely different animal in and of itself. What we are seeing is that the industry, the innovation, the pace of innovation, fast outpaces the framework that is already in place, which means that every year we need to ensure that the framework remains fit for purpose. So we are very cognizant of the industry trends. Actually, what we are doing at the BMA, we hold monthly sessions, departmental sessions, when we call them monthly market monitoring sessions, where as a department with other departments, we come together and we notice, we observe what kind of market trends there are out there. And then on an annual basis, we do a supervisory planning session, and then we do both a stock taking exercise as well as a horizon scanning exercise on what is to come. And then at that point in time, we take the decisions to whether any amendments need to be made to the framework. It's not only on the primary act that changes may need to be made. It may be under the subsidiary legislation. It may be under a code of practice. It may be under guidance. So an example is asset tokenization. DABA caters and has catered for asset tokenization, even if asset tokenization was not a thing back in 2018. But what we saw is that we need more granular requirements, more granular expectations, more granular guidance as to how entities can conduct their business or can demonstrate that they conduct their business in a prudent manner. And to your point, if it is welcomed by the industry or not, everything is under a consultation process. There is a lot of dialogue. So using the tokenization as an example, we issued a discussion paper late last year. We received feedback. Now we recently published a consultation paper on asset tokenization, and the consultation closes 30th of June. We are going to be receiving feedback. We take into consideration all feedback received, and then it results, morphs the final output. And the last thing that I want to mention, because that consultation process is also for the primary act, what really helps when it comes to this agility is what has been coined by our premier, the real Bermuda Triangle. There is a collaboration between regulator, government, and industry. So everyone needs to be on the same page, on the same wavelength. That you need to have a conducive ecosystem. So it's not only a regulator, it's not only a government, it's not only the industry, it's the symbiosis of all these three actors.
So that's a Bermuda Triangle where things are actually found rather than lost, right? Oh, that's amazing. Okay.
I've been traveling back and forth so many years.
Yeah, so that's great. Jacqueline, so we've discussed MiCA with an approach. We've discussed the FCA with a new approach, and which are more rule-based. And I think the Bermuda approach more principle-based, right? But with DARA, with the Digital Asset Regulatory Authority, you are it's an SRO, a self-regulatory organization, right? It's based on FINRA. I wasn't aware of this. I had never heard of this, so maybe the audience doesn't as well. Could you elaborate on how that approach is different than what we've already spoken about?
So it's sort of integrated but different. So with SROs, self-regulatory organizations, I mean, the idea is to bring the community together, the industry within, to come together to say, this is how we want to have the ethical guidance, the standards, the rules, and to say if someone is not acting correctly, we in the industry are going to say, watch it, let's step forward, let's self-correct. And it takes into guidance what everyone else is doing legislative-wise, but it's also looking at how do we self-organize and then self-direct and think about the consumers that we're serving. So really what DARA is doing internationally is pulling together a group of communities, both with COSI, the consortium of stablecoin issuers, to task force in different communities, whether it's Africa, Latin America, Europe, or even UK and EU, to even the AI agents and the humans in the loop. Again, even the next task force that's going to be announced is dealing with IoT, just because of the fact that we have so many different pieces of technology that are being integrated with digital assets, and then how do we regulate and how do we support that innovation? And that's what an SRO is, to kind of look, how do we kind of communicate that to the regulators, because like you mentioned, the education side is huge, because regulators come in and they come out every 2 or 4 years, and some of them have business backgrounds, some of them don't, and some of them have tech backgrounds, some of them don't, but they are starting to touch how we operate. So SROs can provide that guidance, not so much from a lobbying perspective, but from an education perspective. And it's to include all associations, because everyone has a purpose and everyone's seeing a different niche in their own backyard. So that's what an SRO is doing.
I think that's fascinating, and I think the FINRA principles are also for broker-dealers already in the US, right?
Yeah. So FINRA, is funded, and there's a specific purpose for them. But even the FINRA model is not always perfect, because again, you have the economics that's involved with who's actually paying for that, and then how is it being moderated and supported by the community. So we always have politics involved, and so that's why sometimes taking a step back from a government entity and making it non-governmental can maybe provide different guidance and different support, because our technology is moving very fast, and it's hard enough for us in the industry to keep up with it, let alone those that are in the regulation space.
Yeah, and I think it also requires a lot of trust in the industry, in the sector, of course, which could be maybe easier for the traditional financial institutes. But is it hard to get this to government agencies, to the legislators, to prove them that this industry also could do this?
It's all about communication. And I think that you have to have a vision and you have to pull people together. It's building a mosaic, and it's knowing that this is a village that's going to be raising the children. So we do have, it is all about networking. But for example, in Maryland, where I live with the Maryland Blockchain Association, we were able to pass 3 different laws. Wow. And so again, it's through that pulling not just the local, but the international community in to the Maryland side that we were able to pass a stablecoin bill. We were able to pass a bill dealing with blockchain and real estate, and also a statewide blockchain task force that Governor Moore signed. So again, it's the idea that cross-border trade happens, and we need to know what's going on outside of our small area.
Yeah. And I think this is on state level, and meanwhile we have on federal level in the US, you now have the clarity going into Senate, I think, and Genius has already been passed. 2 bills. Will this create one winner in the US, or?
I don't think that there'll be a winner. Because again, even though the bills have been Genius has been passed, but there's still rulemaking now. Yes. It's not finished yet. And so, and even within the rulemaking, even though it was put out for public discussion, the final, results aren't always there yet. So we sort of know, who the main 5 players might be, but there are others that are going to come in through different markets that are going to also start to play. So that's on the Genius side. On the Clarity side, again, you look at the first 2 initials of the congressional, and that is providing guidance for within the Congress, but now we have a lot of different players who are trying to influence the final results, and that's why it took so long. So even on the Genius side, it's trying to innovate from the idea of making the US dollar really the guidance and the leader in an international community. I'm not going to say my own personal opinion, but again, I think that we are an international community. We shouldn't be looking at just one currency as being the leader. I think that we need to look at how do we help the whole.
Fascinating. Yeah. All right, Hadley, I want to go back to you. You liquidated hundreds of millions in crypto assets in bankruptcies across the BVI, Cayman, and Seychelles. What do you think is the biggest structural mistake that you see happening that regulation could have prevented in those cases?
It's a tricky one. The one thing that keeps recurring, and this goes back to TradFi times as well, is when something's gone wrong, whether it's gone wrong out of market conditions or somebody, bad actors, almost always there's an element of where are the assets? That's our primary job. But who owns these assets? Who's got hold of them now? Too many times, both in funds, but also now we see it on platforms, yield platforms, where somebody will come along and say, well, I put X hundred Bitcoin on there. I can see it's my wallet. I've not engaged to buy a product which would make me an unsecured creditor. This is proprietary. These are my assets. I can see them. I want them back. But what had happened was the terms and conditions are clear. The regulation, how the law treats it, is also clear. But what the company did was something completely different, and they swept everything into a pool, and from that pool it was deployed, and it went to the usual costs for service providers and things like that. So I think what's really important, and we've done a bit of work in Guernsey, in Cayman and BVI, and now with the UK FCA, with the regulators. I think what's really important is we can get somebody to really think about, here's the contractual situation, here's the regulatory situation, but what's actually happening? So if they can build in some transparency there, proof of reserves and things like that, some processes that really build back into some trust in the system, in fact taking the trust out of the system, leaving it verifiable, that's really going to be valuable, because that comes up every single time. There's always some debate about where the assets are and who now owns them, even if before they look to be attributable to the customers using that platform.
And is this now fixed under MiCA, in your opinion?
Yes, it's completely
yes, it
fixed.
Is.
Yeah,
Completely fixed.
And it was,
We're all safe.
Fine, yeah, but I mean,
that means you're out of job then.
MiCA's perfectly well, focused on that custody aspect as well, and making sure that things are segregated properly. And of course, it's great writing the rules, but just have some sort of verification, oversight, maybe regulatory oversight as well as third-party oversight. Then you'll get a lot more people acting in the way that they should be acting.
Interesting. And I googled Seychelles last night, and the funny thing is that I found all British newspapers reporting that it's better weather in the UK than in Seychelles right now. But other than that,
and other than
that, it looks like AI generated because I think it's only beaches there. There was a Supreme Court ruling where you were involved, right? Also on the custody part. Could you elaborate a little bit on that?
It's back to that point. So essentially, we ended up with pooled assets, and a bunch of creditors, customers, were claiming that those were owned still by them. These are my assets. That, as I say, the assets have been moved into a pool, but with them being digital assets, a very, very good question from creditors was, well, I can see, can't you just trace them on chain? But in fact, what had happened is the assets had been pooled, they'd been sent out to third parties, and some assets received back again. So effectively, that chain of custody has then been broken. So what the argument was there was you had a pool of creditors saying, no, you put the assets all in one pot and we all share equally, because those creditors would get a slight uplift from that. And the people who thought they owned the assets, they had their argument. And the judge did have a look at first in, first out, all these different tracing theories, but just said, actually, if you were to trace everything, even if it went back and forth, and you came back to the assets, it would be about $1 billion tracing exercise. So as we're arguing over less than $10 million of assets, you just have to share in the pool. So there's some precedent there for much bigger cases, if there were any. Maybe they're, in different fact pattern, tracing may still be available for people to go and get their assets back.
All right, perfect. Well, I heard we had 5 minutes left, so I have some quick questions there that I would also like a quick answer on from all of you. So I think the first, because the panel is called "Which region will win?" What does winning actually look like from your perspective or jurisdiction?
So I think the problem we have in Europe is that somehow we think that winning means, again, regulating everything and producing as many pages of regulation that we can. That's obviously not the answer. Winning, in our perspective, would look like creating an environment where companies, developers, and generally operators know that they can build safely, they have legal certainty of what they can do and what they cannot do, and of course at the same time consumers are protected and systemic risks are addressed. So that would be a winning scenario. I don't know what losing doesn't necessarily means that like regulation in itself doesn't mean losing. I have to make it clear. Yeah. I still think that regulation can be a good thing if it's done right, but it really, but it really needs to create that environment. If we find a perfectly regulated European environment with no actual movement, no actual companies, no operators, developers that move abroad, there is no protection for developers of decentralized technologies and open source technology, then we lost. And I hopefully we're not going in that direction. I think, as you mentioned, just last week the European Commission published the consultation for MiCA 2. So this is an invite to everyone. This is the moment where we can go and shout at the European Commission, this is why MiCA is so bad, this is why we hate it. So please do that, or come to us and we do it all together.
Yes, thanks.
So I think winning has many layers. I think for sure not stifling innovation with the regulation and looking at how do you create sandboxes that people would like to go into so they can experiment without always having the regulators have oversight over them. So there has to be still freedom within. And then, like you talked about in consumer protection, I think that there needs to be massive education. We have a new financial literacy that we need to address, both at the school system, college, and otherwise. And we also need to understand that we do have a responsibility as entrepreneurs, but consumers have a responsibility too. And sometimes they're going to make mistakes. And sometimes, unfortunately, they're not going to be compensated because of their mistakes. We all make mistakes. But I think we do, as an industry, have an obligation to showcase how do you reduce that risk And again, we have the institutional side, we have all these layers. We're just at the start of this.
Great, thank you.
Yeah, I think to build on those points, education is definitely a massive piece. I'm on a digital asset and fund finance education panel, and we're trying to get into schools because too often we'd be focused on young professionals and upwards. We need to get people financially literate from a very young age up. And on the regulation piece, yes, we all talked about the EU sort of maybe looking to over-regulate in the first place and then sort of pulling back for something a bit more manageable. But one thing I saw a few years ago was people who'd set up, because of the lack of regulation, some good faith projects that are set up in, say, Seychelles owned by a Panama Foundation. Well, of course, if you want to take that to serious investors, serious regulators, you're not going to get very far with that. And that's where I think BVI and Cayman first came in and said, well, people, the BlackRocks of this world, they already have hundreds of funds with us. They already know the lawyers, they know the regulators, the courts and everything else. We can play that game here. But then when you're going to retail, that's not where necessarily Cayman's heritage and strong points are. So I think we can take that, that not all businesses trying to run away from regulation, they just want to be regulated well, and have that engagement between business and regulators. I think that's the way forward.
Perfect. Christos.
Always great being the last after so many great answers, but yeah, I will find something else to say. So, innovation and regulation, I think these are not necessarily competing notions. I think they need to coexist at all points in time. Regulation is not all bad, I have to say.
As a regulator.
As a regulator, not biased. I think the Northern Star should be responsible innovation. This is, the crux of the case is. I completely agree with the education component. I completely agree with all the points that are being made. And when I'm saying innovation, first of all, regulation should be an enabler. It should not be a stifler. And this is how it should be understood. So that's why I'm seeing a very harmonized symbiosis between the two, which is going to determine the winning, not necessarily jurisdiction, and it should not be only one jurisdiction. This is a borderless industry. So if we're talking about a winner jurisdiction, we're going to be talking about a losing industry. Whatever, it all boils down to what the strategy of a group is, because there are a lot of groups out there, and there are a lot of partnerships, a lot of synergies. So there's definitely a use case for Europe, there is definitely a use case for the US, there is definitely a use case for Bermuda, depending on the client base, depending on the strategy, the type of products that you want to roll out, depending on your priorities. This will determine the jurisdiction of choice. And the last thing that I want to mention is we are talking about innovation and we are kind of linking it to the industry. Innovation should be embraced by the regulator as well, should be embraced by the government as well. We do have innovation deeply ingrained in our DNA. Our CEO codes, actually, is really an adept coder. We do have innovation sprints that we're holding on an annual basis. So you need to understand innovation. You need to embrace it. You need to find a way to regulate, to think outside the box and regulate in a pragmatic way that actually makes sense.
Great. Okay, so one final question, very short, because the panel is called "Which Region Will Win?" So, if you would start a crypto business today, where would you found it? Because I know you're going to not answer the question if I ask it in another way.
So I wish I could say Europe, but right now, honestly, we all know that that's not the case. You will not be starting a business in Europe right now, although we try to give that legal certainty, right? Everybody was asking for legal certainty, and compared to what there wasn't, in the United States, we thought that, yeah, sure, let's give them legal certainty. All the businesses are going to flock to Europe. We're going to get so many crypto companies. Yeah, so next.
So I would do the United States. Yeah. Because we have 50 states, which also means we have 50 different mindsets right now, even though we do have a federal overlay. But I would just add a point to the conversation from last time. I would ask that any new laws have an educational requirement, that funds go into an educational pool to help start the education. Yeah. I think that should be mandated by the companies.
Education on the consumers or education on the lawmakers, maybe
both.
As well. Yeah, perfect.
It's difficult to ignore the US if you want to scale. Now we've got Clarity and Genius. I would say, to plug for Guernsey, It's a place where people have come way behind the curve, but they've come now to a regulator. He's fully engaged, and you can meet the regulator and have a cup of coffee at the head of the department, and they're knowledgeable. They'll go through everything with you, which is not globally common.
Yeah, absolutely.
So yeah, that's a small plug there.
Well, and the most surprising answer of the day, probably.
I'm going to be sitting this one out.
Yes.
For obvious reasons.
Yes.
I will say depending your strategy.
Very nuanced.
The company that I would like to set up would be.
Oh, absolutely. May I ask what you would do?
I will be pleading the fifth.
Okay, perfect. Thank you.
Thank you very much.
Right.
Thank you all.
Thank you all.
Dankjewel.
Dankjewel.
Ευχαριστώ. Grazie mille. And thank you both. Thank you very much indeed. So basically, we finalized with it depends. Could have been a lawyer panel, but luckily not. Thank you for the very nice comparative analysis. Now, we are moving on now to a fantastic keynote, after which we will start with the pitching competition. So I hope that our next keynote speaker is around. Our next keynote speaker is called Lorenz Flechtenmacher. Yes, fantastic, you're here. Of Dewa? Do I say Dewa? Diwa. Diwa, oh, fantastic. So Lorenz is the CEO and co-founder of Diwa, which is the digital identity infrastructure behind the eBox wallet in Denmark. Now, that's pretty impressive because they have deployed actually the first production scale EU DI compliant wallet to over 5 million users and issued 160 million plus identity credentials. Now, Lorenz's work really sits at the intersection of privacy architecture, eIDAS 2.0 compliance, and national scale deployment. And Diwa's SDK enables wallet builders across Europe and probably at some point also beyond to reach production in 42 days. I thought to throw in a couple of data points for a change. Lorenz, please be very welcome on stage. Feel free to welcome him as well by clapping. You are set up fantastic. Looking forward to your presentation, and thank you for being here.
Thank you. What up, everybody? How are you feeling? Good? Nice. Usually at these conferences, around that time, everyone's tired. I mean, that's probably why the crowd is empty. But I'm happy you guys are feeling good. I'm here to talk a little bit about what comes beyond digital ID. Digital identity is nothing new for guys in the blockchain space. It's been around forever, but in the mainstream, it's only landing now. We've built our first prototype on Hyperledger Indy. Is anyone familiar with that? Raise of hands. Some are. That's great. Later, we built on the European blockchain services infrastructure. I was quite happy someone from Europe, representing Europe, was here, because EPSI got shut down by someone high up in the European Commission, so now we're working more with centralized systems rather than decentralized. Nevertheless, the same principles still apply. Self-sovereign identity is making its way to the broad mainstream. From the end of this year until the next year, every citizen in the EU will receive a digital identity wallet. We were the first ones to launch it in Denmark. Around the EU, it's quite funny, small startup launching huge infrastructure before the member states, maybe not a surprise. And yeah, so far this year we've issued 19 million credentials. This goes from identity credentials to single-use age credentials. And although we've deployed our wallet infrastructure to 5 million users, 720,000 of them are actually active, which is quite nice. There's two things. One thing I'm going to do with you today, and one thing I'm not going to do. What we're going to do is stimulate the brain, start thinking about some digital identity concepts. What I'm not going to tell you is how this eventually will work or should work, because there's no final answer. We're currently conducting a research on this digital identity stack, what it should look like within organizations, and I'm happy to share the report once it's done. So, enough of the boring stuff, let's get into the good stuff. what we see right now happening is that identity is moving away from just verifying there's a user, there's a customer, who is this person, to what is this person actually allowed to do, which is also the right question to ask, and the right question to ask from the start, because it shouldn't matter if it's a person, an AI agent, or whoever who's acting. It should be important if that individual has the authorization to do so. So we're moving from identity as profile data to identity as executable authority. So why is that happening now? In the EU, we are expert regulators, and there's actually a lot of regulations that land with a very similar time horizon. We have IDAS2, European digital identity wallets, mandatory for all member states. There will be business wallets as well. They come at a later point, probably important to most players here, as you have to verify businesses. It will be a beautiful way to verify who you're doing business with. We have MiCA, we have the ECB DOT, and now also WASP acknowledges AI agents as its own, needs its own security framework. Although these are very different things, they have one thing in common, which is identity. It lies on the ground, who should be able to do what. So we need to figure out how identity should work within organizations, between organizations, from organizations to citizens. Yeah. What we see conducting our research right now, I guess most of you guys have already figured this out. But when we talk to organizations, primarily legacy organizations like banks, for example, we see that identity is fragmented, but also authority is. So depending on what kind of station you're dealing with, be it the front end or the back end office, in a bank, for example, we see that these parties have a different set of data about the user, and the user has different access rights to certain actions. What is new now is the agents. There's also someone here, I can't see him right now, Erasmus, he's working with this on a daily basis now. AI agents, all of a sudden, new thing, they have their own API keys, credit cards, they act on behalf of you, but so far there's no regulation kind of dealing with this kind of setup. How should agents deal with all these regulatory requirements? So if I give an agent a credit card to buy groceries for me this week, and this agent goes out and buys crypto stocks instead, who's liable for that misbehavior? Is it the model operator? Is it the bank? Right now, if my credit card gets stolen and that thief buys things with that credit card, it's actually the bank that has to give me the money back. So it's kind of interesting to think about these things, especially in a context where things are moving quite fast now, and organizations are actually required to shift their operations massively. So when we look at these organizations, analyze them, talk to them, look at the regulatory frameworks, we kind of found 6 pillars that should be the common sense when preparing for a unified identity stack. The wording might change, the stack might change at the end of the report, but I think it's still interesting to find, to talk about the findings that we have so far. We have the 2 first layers, which can be somewhat outsourced to the regulators. We have the governance and authority layer. This is a bit of a combination between the regulators, but also the organizations individually. and that actually requires a lot of brain juice. You can't put an AI agent in there or buy a nice tool to do that for you. You actually have to sit down and think about the principles your organization wants to act in. The second part, which is really amazing, and there's great stuff happening in there right now, when you look at authoritative sources, is that the EU actually mandates the member states, together with IDAS2, to publish a set of authentic sources when it comes to public registries that can be tapped in and can be retrieved. There is something coming that is called QEAAs, Qualified Electronic Attestation of Attributes, the highest level of credential you can carry as a citizen, and they will be derived from these authoritative sources. So we have the first two pillars which already improve the situation an organization is in massively. First, we know the principles upon which we're going to act on, and second, we know where to retrieve this information from. In the third part and the fourth part, that's kind of where IDAS2 kicks in, but also around the globe these principles get adopted. We have verifiable credentials now. These are proofs that can be carried in a wallet and can be presented over and over again, rather than retrieving this information, tapping into governmental records and retrieving it all the time. The holder actually carries these credentials and is able to present them to whoever needs it. This is something which is hasn't quite arrived in the mainstream yet, but within the next 2 to 3 years, we will deal with EAAs on a daily basis. And of course, these EAAs have to be stored in a wallet. This is a bit different to a crypto wallet. It's an identity wallet, but the same technological foundation still applies. Then the next two, this is where the organizations come in, authorization and delegation. This is where you have to apply the rules that you have defined in layer 1. So when you're in a payment flow, you have to define the sets of rules this user should be acting upon. And lastly, which is actually quite boring but super important, is audit revocation evidence. The auditability of identity interactions, of actions within platforms, is probably the most important part of a journey of a business, but also a citizen, because that's actually why we do it. Because if something breaks, we need to prove why it broke, at what time, and by who. It doesn't matter if everything works, but it does if shit hits the fan. So the stack pays off in some pretty much common sense use cases. That's the 3 we found so far are the most impactful. It's the user onboarding. Instead of document scanning and face scanning, liveness scanning, uploading documents, you can share them instantly through an identity wallet. So that makes the onboarding flow, the KYC flows for organizations massively different, but also massively better. So from our research, what we've seen is that a usual onboarding flow can take up to 10 minutes, depending also on who you're onboarding, if it's just an individual or if it's a business. But that gets cut down at least by a factor of 10. So 1 minute instead of 10. That's pretty crazy. Payments. Right now, I don't know who's from the payments space. Payments is crazy. It's interesting. There's acquirers involved, issuers involved, PSPs involved, EMIs involved. It's a huge network of different players, and they have to kind of pass on these credentials to, or credentials soon, but right now different ID tokens. And it's a huge mess. When we figure out how authorization should work from a holder perspective, and that's auditable from start to end, this will make the payments industry pretty different. Right now, there's a WeBuild consortium. It's a consortium supported by the EU. They launched a focus group on payments to specifically investigate this and how it's going to impact the industry. And then last but not least, AI agents. I can again highly recommend you to talk to Erasmus. He's standing in the back there. You can, with verifiable credentials, bind your credentials to any kind of individual or agents you want to give the authority to act on your behalf. And again, the beautiful thing about that is the traceability of it. You're not giving it a random publishable key and then it's off to do whatever they want, but you can delegate authority to certain degrees with this kind of technology. Yes, that's pretty much already it. So we will see a shift from controlling access to controlling action. I might not convey the excitement that I have for this, but I'm actually very happy this is happening. It's going to make the lives of so many businesses and also citizens better. It's going to make it more secure, and the best part about it, it's going to make it more privacy preserving. Although the EU has not adopted blockchain-based technologies for these digital identity wallets, it's still a massive change that we see happening right now. Thank you.
Thank you. Fantastic. Thank you for your time.
Thank you.
Thank you, Lorenz of DIWA. Thank you for your keynote. Now that we're all here gathered, I think many of you know that something that is coming up now is going to be pretty exciting or thrilling, if I can say, as the founder of Thrilled Labs, right? We always find everything thrilling. We're gonna start very, very soon with the pitch competition. I am just looking for a second to my left where I see already all the jury members lined up. Are we good to go, I ask? Yes. There is just one minor thing that I do need to check for a second with you, Jacob, something we discussed earlier. So I think it would perhaps also be good to change the slides behind me if there is one of the team members around. In the meantime, I will start introducing what we're going to do and what the rules are and whatnot. So basically, this is a fantastic pitching competition. I was here myself last year as a participant. I know it can be pretty nerve-wracking, and it's very, very nice that many of you are here, and including our investors here as well. So this is basically one of the most important in-person pitching competitions, right, in Northern Europe. And this is really a stage also where many projects, including Web3 and AI projects, or those operating at the very intersection of it, have been applied. Maybe we can, thank you, change the, I can do this? Ah, that's great. Okay. So what I wanted to say, this is the stage to conquer if you are a project in the Web3 and or AI space. The Nordic Blockchain Association is presenting this together, of course, with Blockchain Sweden, very, very dear partner. And of course, now it is maybe important as well to share a little bit more about the rules, right? Fundamentally, a couple of projects are going to take the stage very, very soon, one by one, and they're going to present their project to fantastic investors that will introduce themselves very, very shortly. Basically, the projects will be pitching 4 minutes. We're going to be extremely tight. We're going to do a hard cut after 4 minutes of pitching, and then that will be followed by 4 minutes of Q&A. And fundamentally, after that, the jury members are going to, gather together and kind of like discuss who was the best, etc., etc. Now, there are a couple of, let's say, parameters that will be taken into account. So first of all, something that, of course, the jury members will look at is the problem, right, and the market opportunity as presented by the projects or the companies. Can also be already a proper company, of course. So alongside that, we will also, of course, hear from them, and they will be discussing the solution and really how innovative this project or the business case really is. Alongside that, of course, we will be keeping an eye on the execution. So really how well is the team able to execute upon that or already executing. And of course, the traction and the business model are also very important, right, to take into account, as investors do. Now, alongside that, the clarity of the pitch, as well as the overall structure, will be taking into account all these different factors. Now, I would love to ask the jury members to kind of like pitch themselves for like a minute or two in terms of who they are and why they're a cool jury member. So, of course, I would love to start Jacob with Jacob Hansen from Nordic Blockchain Conference and Association. You're a jury member as well, right? Yes. You aren't a jury member. Okay. Apologies, I thought you were a jury member as well. In that case, Jacob, we are going to continue with Johan Toll from Blockchain Sweden. Luckily, you are a jury member. Thank you. Please feel free to join the stage for a second. Maybe you can pitch yourself in like 1 minute or two.
Sure. Hey, guys. I'm Johan, obviously, and I'm the chairman and co-founder of Blockchain Sweden. So please come and join Blockchain Sweden here. We're a fantastic non-profit organization to promote blockchain in Sweden overall. I'm also a founder of Trace Systems, where we build digital passports to track the provenance of different types of products out there. So super happy to be here. And also about me, myself, I'm also an investor myself, and I've also been part of the Nasdaq venture team before. So I'm used to these type of sessions. I used to be on stage pitching myself, pitching my company, but I'm also used to listen into different various pitches here. So looking forward to see who will be the winner.
Yes, me too.
Thank you very much.
Yes, we can already, yes, feel free to, maybe you can hand over the microphone to Yin Yong from Yeguim Capital. It would be great to hear from you as well, Yin, what you're up to. And thank you for joining us all the way here and giving us your time.
Thank you. It's actually Jin. Welcome. My name is Jin. I'm part of an investment holding company called Yeguim Capital. We invest out of our balance sheet. We've been doing this since 2013 in digital assets. We've been also investing into fintech venture, as well as funds, as well as growth equity firms. So looking forward to the pitches.
Yeah, I'm definitely sold on that, Jin. Thank you very much indeed. Now, alongside yourself, we are also accompanied by Wojciech Jesnach. It would be great if you can actually also pronounce your name properly for the audience. And what I do know is that you are a part of Pointer Capital, which is a little bit easier to pronounce.
Correct. Thank you very much. So my name is Wojciech Jesnach. I'm from Poland, but our fund is from US, from Delaware. We have 3 funds under asset management. We try to invest in very bold ideas, but at the same time, founders. We really like to see founders who are very close to bold ideas, where actually can change not only the industry, but at the same time what they think about it. So if you are looking for right partners to do business, here we are. Thank you.
I'm sold. Absolutely. Now, last but not least, there's also Arun. You're here, right? Yes, Arun. Thank you very much. Arun Mahayaran of UNICEF Crypto Fund. Thank you for being here, for giving us your time, and maybe also your money. Who knows?
Yes, thank you for inviting me. So yeah, I'm a little bit different compared to these 3. So I work for UNICEF, which is of course a UN organization, but I'm part of a team called the UNICEF Venture Fund. So that's a team that's been in existence since 2014, and we provide equity-free grants up to $100,000 to teams who build open source software aligned with the SDGs and aligned with UNICEF principles, etc., etc. There's a certain set of criteria, but we have been sort of helping the blockchain for good space, or the social good space, If any of the projects, of course, there will be a angle to make money as well. So we invest only in private companies. You have to make a profit. That much is clear. But if there's an angle to help organizations such as UNICEF, then yeah, feel free to come to me.
Yeah, thank you very much indeed. That's fantastic. Please be all welcome, gentlemen. Now, just to recap really briefly the rules. So the first project that we'll be pitching is BlockSite. And just to recap really briefly, there's 4 minutes. There will be a hard cut. You know, nearing the 4 minutes, I will walk towards the stage and I will really try to move in and make you stop, basically, just to have the level playing field. And then there's a 4 minutes tight of questions and answers. Also, just a quick reminder of everyone pitching to hold the mic close to your mouth like this. Oh, that's really a lot. Close to your mouth, all right, so that everyone can hear you properly. So first project will be BlockSite. Is that you? Fantastic, fantastic. Devon, right? Yes, you'll be speaking also tomorrow, if I'm not mistaken.
That's correct, yes.
I really hope that if you go to the next slide, there should be your project.
Let's find out.
Okay. Fantastic. Okay, I will put on the timer. Please be very welcome. Great to have you here. Yes. Fantastic. Putting on the timer right now.
All right, so what do these companies have in common? Looking at them, you see that they're all very huge, successful companies. So more precisely, what do they have in common in terms of how do they utilize AI directly with the consumer? What you'll find is that they are using AI to figure out what the consumer wants in the future. When you're watching Netflix, you see a recommendation for what you want next to watch. Same with Amazon. You've all been there, so I don't really need to explain that. Let me explain my own product. So the problem with these big companies is they expose individual users to get what they want. But with on-chain data, why we're all here, what blockchain does for us, you don't need to do that. So we see users in relation to a protocol on-chain, and we see what they're about to do. Who's about to leave before they leave? Because according to Dune, about 70% of users churn immediately after one transaction. We retain them automatically through airdrops, through incentives, through recommendations, just like Netflix does, by reading the wallet data, what they're interested in, and seeing what comes next. So as I've stated, we have NASA-grade AI. I will talk about one of our founders. He was the head of AI on the Artemis moon mission and Swan SF. So on-chain data happens silently. And as you can see through this one, this is a screenshot of our actual app. So these are the active wallets. These are at risk, the automated actions that are happening, and the revenue streams. So churn is invisible. As I stated last, the 70% churn is shocking, and it happens silently. So what we do is we predict the next move, and we use automatic actions to keep them engaged. So now we have 19 people waitlisted for our AI-powered LP predictions. So we're not only predicting what wallets will do in relations to protocols, but we can also see what they can do in relations to liquidity pools, whether or not that liquidity is safe, whether or not your investments are safe. This is whale signals, rug detection. All of this happens through neural networks. Here are our partners. So we have Carrot Shop, which is AMGI Studios. This is a gift card store. When you click through it, you can see what you will be likely to buy next if you enter in with your wallet. That's something you can check out today. We have SwartPay. It's a payments layer for basically the African market, running on crypto rails to make sure that people can receive money without paying large fees. And we have SpiceNet. We are analyzing the wallets and giving SpiceNet safety recommendations to protect their partner protocols. So what we're doing differently than anybody else in the market. A lot of the market right now is just indexing wallets, and we are actually giving the actual predictions as to what the wallet will do next, and we are automating actions, as I've said. So here are our founders, and we're different from other founders in the sense that we all have a very strong technical background, and we will keep pushing and fight for this product to succeed. So That one's me. Hi. I've managed AI trading engines. My specific role was to connect them to DEXs on chain and make money. I led the Studio Chain Layer 2 blockchain launch last year. I built all the node infrastructure for that. And I've built smart contracts for Haven 1, MyPet Hooligan, and NHL Breakaway. Haven 1 is a... Let me just skip to everyone else. So Adam's right there. He has 20 years of working in distributed infrastructure, real-time AI engineering. He's done aerospace. And then this is where...
Sorry.
And then our final founder is Petrus Martins. He has 30 years in NASA experience, funded through grants and contributed to Artemis, and has been a professor at several colleges, including Harvard. All right, before she kicks me off, scan the QR code. Oh no, QR code's gone.
It's okay, it's okay. Thank you very, very much indeed, Devon. This was great, and I'm sorry for, thank you. I needed like an assistant here. Okay, so Devon, there is still the Q&A. So I will just quickly give this to maybe one of the first investors, and then I will keep handing on the mic. We only have one, sadly, so I'm going to quickly reset, and then, yes, please, sir.
So the churns in wallets may be intentional versus voluntary versus, meaning that people churn their wallets for all kinds of reasons. How would you be able to detect that intent?
Sorry for also running away. I got very, my time's up. But the churn, okay, so what we're looking at specifically, right, is you have a wallet, you run that is doing a lot of actions with your protocol. It's making you a lot of money. And all of a sudden you see it decline. And you may not see that even without our charts, but we're looking at why it's declining. So is it going to another protocol that's similar? Is it, in relation to the sentiment in the market? Why is this happening, and how can you fix it? So that is the churn that we're trying to stop. Does that make sense to you?
Partly, but it could be, I understand, but you don't understand the intent because I could have been hacked, right? So, and I could be churning my wallet into something else, or I want to do something else with I'm going to spread it across 20 new wallets as a diversification.
Do you want to reply? Yeah, okay.
We'll see that too. So a graph neural network will look at all the wallets in relation to one another, right? So we're going to see the transactions going between the 20 new wallets, or we'll see, unfortunately, the wallet's funds be released into another wallet, go through Tornado Cash, and disappear. So this is something that, as a founder of a protocol, you can see, and that's where we come in.
Maybe we can go. Yes, fantastic.
Yeah, sure. 2 more short questions. The traction and the business model here. We briefly saw 3 clients on the slide here. Are they paying clients today? And who else do you have here? And what is your business model?
The business model is we have 3 types of tiered payments, right? So the first is open right now to a smaller list of people, and that's the enterprise model at 3,000 euros a month. It's expensive, but you are getting all of this data in one package deal. So that's the revenue model right there. And then we'll open a pro tier, which will be more, the intention is to open the gates to people who maybe casually invest and want more information, and that'll start at around 300 euros a month. We may do less frequent scans for less, but that's what's coming next.
How many paying clients?
3.
3. We still have 1 minute and 10 seconds for another question. Yes, fantastic, sir. Here you go.
So in order for predictions to happen, you need probably transaction data from that wallet, and then that's one question. And then just downstairs, the panel was saying that the future of finance and everything is traditional finance, but on blockchain rails, which I assume will come with KYC. So if we know the human beings in the future, who's dealing with which wallet, if we know the identity of the human, is there a scope for this?
Okay, so approximately 45 seconds.
We are covering wallet data, not KYC. So the user maintains their anonymity. They remain anonymous. And then we look at essentially what they're buying, what they're interacting with, and that is how we assess the user. And that is what we're doing for like SpiceNet, for example. We're looking at, like, we're essentially scoring a wallet's risk level. Does that make sense?
All right, so in that case, just because we still have 10 seconds left, but then you spoke a few seconds longer, so I'm going to cut it here. Thank you very much, Devon. Much appreciated, and you have quite a background. I was researching you for tomorrow's talk, like, congrats. Right, so the next project that we will be speaking with and learning from is called Stack by Me. Fantastic, more women on stage. Right, fantastic. Thank you for being here. Please keep the mic close to your mouth. Yes. I'm gonna click on, I'm gonna give you this, yes? Okay, so I'm gonna walk here, and then I click on start, and then the stage is yours. Please.
Thank you. Hi everyone, my name is Rebecca, and I'm the country manager for Stack here in Sweden. Stack is building a new type of investment experience, because in the finance industry, platforms have been built for people who already know how to invest, but we are here to build for the rest. Because even in Sweden, 1 in 4 women still don't have investments in mutual funds. And if we're looking at single stocks, let's see if we're looking at single stocks. Okay, so this, now. And also crypto, it looks even worse. So why is that? Well, we don't believe it's an access problem, because there's a lot of good platforms in the market already. Rather, we think this is a confidence gap. Oh.
Okay, that's good to know.
No, it's not really working. Okay.
It's okay, no worries.
Very good. Yeah, so when we speak to women, what they say is that many feel that they don't have enough knowledge to start investing. And adding to that, many also feel that they don't have a natural place to talk about investments and get guidance. And in addition to that as well, on the current platforms, there are many options, many complex features, a lot of finance lingo, so it can be quite hard to actually get started. See, this is not flowing very well. So, we have built Stack for addressing these problems. We combine education, community, and investing in one regulated platform. So this means that users can learn by taking quizzes and watching videos. They can follow friends to get inspired by what friends and family invest in. And of course also make their own investments in the app. So we are building a platform for the next wave of investors, not the traders, but the regular people who just want an easy solution for all of their asset classes, including crypto. Oh, okay. No, this is not working at all.
No. We'll give you a few seconds extra.
You just move to the next slide.
Maybe we can do it manually.
Okay, so this is not the next slide.
It's not in the right order?
No.
Or maybe you can say what slide you want, then we put it on there. No worries.
Okay.
It can happen. Tech is still built by humans, of course. Ultimately, despite all the AI.
Okay, so this is not the right version, but we'll work with that. Okay, so yeah. So we have data that proves that this is a product that really works and that resonates with the target group. We have great traction in Norway already, where we've been live for 4 years. And we have 30,000 app users and just crossed 200 million in assets under management. But what we're most proud of is, of course, that 80% are women on the platform. So we really made a product that resonates with this target group. And behind this is a small but very dedicated team. We have our founder and CEO, Madeleine, who has a long background in finance from Pareto, and she has really built a movement around female investing in Norway. Our CTO, James, has over 25 years of building startup platforms, and me, myself, I've been working with investment solutions and wealth offerings my whole life across both banks and fintechs. So now we are raising 20 million, and we are looking to use those funds to expand into Sweden, which we are going live next week, hopefully. And we're also launching crypto trading after the summer. So we think that the biggest opportunity in investing going forward is not really to serve those already inside the system, but rather bring in those who have been left out. Thank you.
Fantastic, fantastic. Thank you very, very much. Wow.
Thank you.
You didn't even go much over time, you know, like only 30 seconds while we were a little bit, you know, cramped with all the tech and whatnot. Yeah. Great job. Let me just reset this and then quickly move to the jury members, and let's see if we can do this without slight problems. Please.
Great idea. Thank you for sharing this. What percentages of users actually invest versus only consume educational content? Once again, what percentages of users actually invest versus only consume educational content?
The last part of your question.
Educational content. So how many users consume educational content versus those who invest?
Okay, dus you can? Yeah.
So we have a conversion on around 20%, but we're working on that. And part of our GTM strategy is really to, you know, get them into the app, get them to consume the educational content. And I mean, that is also what we see is important with this target group, that they really want to learn and become confident before making their first investment. So this is a deliberate strategy that we have.
Follow-up question. Which channels work best?
I'm really happy I don't wear high heels today.
So we're mainly focusing on a social strategy, primarily organic, but also mixed with paid. And then we're also using a lot of events, both webinars and physical events. And these are very, very strong converters, just because they are also like educational, and we also get to build a lot of community and brand through those events.
So I saw your revenues grow, and then profits also decline more. So what needs to happen between 2026 and 7 for this to turn around?
So we're investing quite a lot now, both in the products and also entering to a new market. But the business model in itself, it depends on scale. So as soon as we have like enough users, that we will have a very nice margin on the business. But it's definitely dependent on scale.
Fantastic. We still have some time.
Yeah, maybe one here then. So thank you for a good presentation. So what has been the biggest adoption friction so far, would you say?
Biggest adoption friction.
Sorry. So what we hear from users is that, well, one thing is that they don't really know where to start. They don't know how to do it. So when we talk to them, the biggest friction when they actually come into the app is still to, you know, what fund should I choose? What should I actually invest in? So we're working heavily on that to really make the flows even smoother, but also need to say that we cannot give advice. So we need to help them with great tools to make them understand what fits for them. And on the Norwegian side, we actually now, just a couple of months ago, launched a savings robot that actually puts together a portfolio for them. So that we will bring to Sweden as well in due course. But that has really been a requested feature that we're so happy to be live with.
Fantastic. Maybe we still have 1 minute in total. Thank you.
The educational content, is it also delivered in a sort of a different way for the women to consume? I mean, why I'm asking this is there's so much content anyway on the internet. So what really differentiates, and then does the how powerful a role does the content play to retain the customers?
That's a really great question, and we see that a lot of, like this target group really consumes a lot of different content on this, and it is a lot of different content available. But I think what's most powerful is really that we are deliberately targeting women, and we're inviting into rooms that are all female, which feels safe. And also, since we're doing everything within this community, I think it's a strong sense of a community that, like the content, I mean, the content in itself on like the basics of investing, of course, anyone can do that, but I think the room and the brand and the community is definitely our moat here, I would say.
Fantastic. Thank you so much, Rebecca. It was great to have you here. Thank you did a great job. Now, we will move now to the next project, that is Chain Comply. Please welcome you. Thank you for being here. It's much appreciated. So, I'll give you this one. I think that you know where to aim, right? Let's just double check that it works. Yes, correct. Fantastic. Pavlina, please take it away. I'm going to click on start right now.
Great. Well, good afternoon, everyone. I'm Pavlina, co-founder and CEO of Chain Comply. And at Chain Comply, we help financial institutions understand crypto wealth. Because if there is one thing holding back the adoption of digital assets, it's not really the technology, it's trust. And trust starts with understanding where the money came from. And this is actually very important because we're living in a new European era under MiCA, where crypto exchanges are moving toward bank-like regulation, and traditional financial institutions are asked by the regulator not just to monitor crypto and crypto-related transactions, but also understand what is the wealth behind them. At the moment, this is a very difficult exercise because neither or banks and both crypto exchanges are equipped only with blockchain analytics tools. However, blockchain analytics tools don't really show us, first of all, how the wealth was generated, overall what happened on the exchange, how the money moved around. So if a compliance officer has to investigate a large crypto transfers, whether it's from an exchange to another exchange or from a crypto exchange to a traditional financial institution, they need to analyze manually fragmented data from across exchanges, wallets, DeFi protocols, on-chain data of many years. And that would usually take between 2 and 4 weeks sometimes. We at Chain Comply solve this by actually automating the whole process, the whole enhanced due diligence and source of wealth process from A to Z. So then the compliance officer can safely answer the 2 main questions. First of all, is the wealth legitimate? And second, can we defend our decision in front of the regulator? And we help them do that 10 times faster because we don't just trace transactions, we actually validate wealth. And we do it by combining on-exchange data with on-chain signals in one unified dashboard and regulatory-ready reporting. And this is actually a $1 billion opportunity because if there is one thing all the regulators around the world are aligned on, that's really the source of wealth. Take MiCA, take VARA, MAS, even the latest US regulation, they all say that the source of wealth is really the only way to understand where the money came from. So essentially every financial institution out there, as well as obliged entities, would need to have our solution to do that a lot more efficiently. The good news is that there is still very little competition in the space. But now maybe coming back to the more important part, thanks to this we're safely onboarding banks, both private and big retail banks, but we're seeing a bit of a backlash with crypto exchanges. And the reason is that they're not quite there yet, even if they have a MiCA license, in terms of understanding what a correct enhanced due diligence process looks like. But they're going to get there because the regulator asks them from it, and we know that because we've actually done this before. We built 2 other startups with the same leadership team, and now we are raising $1 million to scale Chain Comply. We want to first focus on customer acquisition on the B2B side, but also roll out our B2B2C strategy through our partners. So I guess that would be it. Thank you all.
Thank you. Thank you very much, within the time as well. 3:55. Thank you, Pavlina. Let me just hand this to our dear investors.
Thank you, Paulina. Quick question. How long does implementation take for an enterprise client?
There is no implementation because if a crypto exchange or a bank wants to use our solution, they're essentially analyzing data that is outside of their institution. So it's a SaaS platform that doesn't really need any integration.
Jin.
So if I'm a savvy investor, I could use a decentralized exchange and not report that to the authorities, or made money through an ICO, which is totally off the centralized exchanges. How would you capture that?
We only focus on crypto source of wealth. So we wouldn't really care much about, not that we don't care, but this is part of a different process. So we wouldn't really reflect on the part that you've made money in fiat. We really focus only on the money that you may have brought from the crypto world. So if you, for example, want to off-ramp the money that you made at a traditional financial institution, they would even today ask you, or a private bank, they would even today ask you for your history of transactions from the different protocols, exchanges that you used in the past. So at the moment, they can simply do it more efficiently with Chain Comply.
Thank you. Please.
Yes, thank you for a good presentation. So which metric gives you the strongest proof that this is really turning into some real business?
Are you asking me about the name, or? Yeah. Well, the conversation has completely changed, actually, in the last maybe 6 to 9 months, because now we have financial institutions reaching out to us. Of course, there is the topic about the long sales cycle, so it doesn't mean that they reach out to us today and tomorrow we have a big contract signed. It would still take 2 years, but we are seeing traction, a lot of traction from financial institutions coming to us and asking us about it. And also the regulator really asks for it. The EBA guidance, the MiCA EBA guidance already from January 2024 explicitly says that source of wealth is really the only adequate way to assess risky clients with money that comes from crypto.
Fantastic. Thank you. Please.
You mentioned that you don't have much competition right now. So, but like players like Elliptic or Chainalysis and Elliptic, Chainalysis, all these people, I mean, they're in crypto forensics, but I can imagine people like that very easily getting into spaces like this if it's regulatory driven. So do you have a strategy to handle competition when it comes up?
Okay, please.
We don't compete with blockchain analytics tools. We actually work with them. So we already have some strong partnerships with some of the biggest names in the industry.
We still have 40 seconds in case. Yep. Here you go.
So who is your ideal customer? Banks, hedge funds?
Ideal customer.
Private banks are very quick to onboard just because they have a very immediate problem to solve. It's just that the private banking market is very fragmented. So private banks are really very, very easy to get as clients. Otherwise, really, any financial institution out there that handles crypto-originated transfers.
If you onboarded one of them, yeah? Okay. Which one?
I'll tell you afterwards.
Fantastic. The time is up. Thank you very, very much, Pavlina, from Chain Comply. Now, as a quick reminder, the winner of today's pitch competition gets a fantastic, epic membership to not only Blockchain Sweden, but also for the Nordic Blockchain Association itself, alongside, of course, the eternal honor of having won the pitch competition of Nordic Blockchain Conference 2026. Now, next up is, sorry, I don't know your names, is Chain Comply, with a wonderful human being attached to that as well. And I also will give you in a second.
Can we try again?
I was not informed about that, but I think that you can surely... Lineage Labs, I'm sorry, I thought that there was... maybe the order has changed. Doesn't matter, also here, tech and presentations are built by humans. What I'm going to do now, you have the clicker, right? Is I'm going to reset, and then when I walk on stage, I click on the timer, and then, the mic. Yes, of course. I really need an assistant here, guys. Maybe that's a next pitch subject. Yes. Okay,
right.
Thank you so much for being here.
Thank you so much, and thank you for having me today. My name is Erasmus, and I'm the co-founder of Lineage Labs, where we are building WayID, the trust rails for AI agents. So I don't think I have to preach to the choir here. We know AI is going to be a big thing. It already is, and it's only going to get bigger. And the agentic economy especially is going to be huge. We'll meet these agents everywhere. This is what we call social agents. So we're going to see them in our dating apps. It's going to be on customer service. They're going to be our personal assistants out there booking our airplane tickets for us. It's going to be pretty universal. We're going to encounter them in many places. They're going to come in different packages. For example, OpenClaw had a huge success. That was a very interesting thing for the open source community. We're also going to see them in siloed environments and by all the big players. That's not just a good thing. Of course, this is very exciting, and we're going to see a lot of benefits. But of course, it comes with some risks. On one hand, we have bad actors who's going to be out there in the world doing bad things as they do, and we're also going to have the agents themselves going sometimes a little funny in the head, so to speak. Basically, we're living in a radically new trust environment online and also in our real world pretty soon. So there's going to be an important question to ask, which is, who are you? W-A-Y, and that's why we're calling it WayID. We need to figure out who are we talking to, what's the origin of this agent with whom we are talking, because it's going to be very important. Show you a little bit of what it's going to look like. Here I'm having a conversation with a digital twin version of my coach, for example. And now I'm going to be sharing sensitive information with that agent in a Google Meet call. And I want to make damn sure I actually know where this agent comes from. And I want to see who's delivering it, who's the creator, is it actually the coach that I hired or not. I also want to be able to provide some feedback when things go wrong so they can update it and make it better. A little bit on the system design. We will have an AI service provider and an agent operator. Service providers are the ones delivering the agents. The operators are those who own them. And they will both verify their identities using self-sovereign identity components of various kinds and using zero-knowledge proofs for privacy-first identifications. We're going to be relying on some of the existing crypto systems out there like Concordium and WorldID. The AI agent goes out in the world. You'll meet them on WhatsApp. You'll meet them on a screen out in the world and so on. And me, as a consumer, I can now go and verify their origin through the WayID certificate. We'll also be relying on things like the ERC 8004, that's a reputation protocol on Ethereum, and other such systems. I won't bore you too much with those technical details at the moment. What I am going to tell you is that this is a backbone infrastructure. We will be that binding between an agent and a human or a human organization. That's a non-trivial technical thing that we are developing, and that's going to be the key ingredient here. With that, we can do many different things. We can create a registry, kind of like a trust pilot for AI agents. We can also make authentication gateways, so you can actually allow agents to come onto your social media platform, but actually always know where they're coming from and making sure you can kick them out if they're not behaving, and so on. Whole new trust rails for this. And why am I mentioning this is to say that we don't quite know where AI is going. Everything is moving so fast, it's so dynamic, that we don't know where we're going to land. But because we're developing that primitive, that backbone infrastructure, we can take it in many different directions. But a little bit about where we are now. We're still down here with the early innovator space, actually, right? They're still being disseminated. There's still a lot of things that has to be ironed out before they can actually go out and live in the wild. How long do I have? Nothing, all right. Well, just briefly rush through it, just to say that we have a roadmap that matches this adoption curve. We're a team of 3 with 50 years combined experience, worked as entrepreneurs and with big conglomerates. Big market opportunity, and we're raising a pre-seed here in June. And that was it. Thank you so much.
Thank you. You did great. Of course, Lineage Labs. Please put your hands together. Much appreciated. But we have time for questions, so we can speak about the rest, right? Let me just reset this again, and then once the investor starts talking, I will click on Start again. Who wants to start, gentlemen? Please. Thank you.
What do you think will be the most likely go-to-market for this? And you said you can go in any direction, but you must have some sort of an idea of.
So ultimately, it's going to be the AI service providers. So those are the ones like 11 Labs today and these other companies that are delivering the AI agents out to the businesses. They'll implement them, the hotels, the whatever, the car rental company. That's the midterm target. But actually, we're going to be starting with building for where we are right now, and those are the agent builders themselves. So we're going to be focusing especially on OpenClaw and Hermes. This was what I was briefly alluded to here, because there we can simply go to market, get in there, and start providing value already with some high value targets. These are the developers, the most crucial piece to get people to get on board. And then from there, we start disseminating into the AI service provider companies when the social agents starts arriving.
That's great. We still have 3 minutes. Please, who's next? Yes, great.
Yes, I'm not sure it went very fast in the end, so maybe I missed some parts. Sorry for that in that case. But what's the traction you have today? Do you have a couple of clients in pilot mode? And then, of course, my classic question is also about the business model that I may have missed as well. How are you making money on this?
Okay, business model and traction.
Fantastic. So we're still prototyping. We have a proof of concept that was just out recently circulating and getting people on board. So we are quite early in that regard, but simply because the environment is moving so fast, we're out taking the pre-seed because one of our moats in this environment is going to be the network traction that we're going to have. A moat in AIs. It's very difficult to have a technical moat because everything goes so fast. So our moat is going to be the social network, so that's why we're attacking it so fast. The business model is to charge ultimately for the AI service providers because they need this kind of infrastructure to de-risk these rollouts. And they'll also be able to actually make their models perform better with the feedback that they're going to be collecting this way. Yes, sorry, I'm just going to let this be in the background because if you want to follow us on socials, you can scan that QR code. So I just want that hanging out there while we're talking.
Who's next? Jin, thank you.
Just curious on the binding. You are using WorldCoin, I think. What is the technical risk there if you go through that? Are you also dependent on them in the future? How should we think about that risk?
90 seconds.
So you'll notice that there was 2 providers there. Could actually add more. There'll be EID. It depends on how much trust or what kind of trust you would want to have give your agent. So World ID is a proof of humanity. It doesn't necessarily give you all the details like a name and an address, right? So if I'm an AI service provider and I want everybody in my system to be fully disclosed, like KYC style, then I'm probably not going to use World ID. But if I'm more in the crypto space where I value privacy and I just want to know that there's a human behind it, then I would use World ID. So we will be relying on World ID in that case, but there'll basically be a range of different tools you can use that depends on what kind of trust score you want your agent to have.
Okay, we still have half a minute.
So what happens if hyperscalers like Google, Microsoft, OpenAI integrate identity and trust in their ecosystems?
They already are, and what happens is they end up being siloed, so nobody else wants to touch them because they're all competing with each other. So Entra ID exists in Microsoft. It doesn't one-to-one do what we're doing, but that's another story. It's kind of adjacent, but then they end up being siloed and they cannot compete. We are also focusing a lot on the visual experience. That's why design is a big part of it. So it's going to be a slightly different experience than what they're doing. Thanks.
Thank you.
Thank you so much.
Thank you. Erasmus is your name, right? Erasmus, thank you so much from Lineage Labs, as well as, of course, the investors for taking part and, following up with all your questions. I do still wonder, is the branding part based on your shoes, or were your shoes based on the branding? Okay. Maybe we'll hear about that during one of the after parties. Who knows? Next up, we will be hearing from 2 more projects. So first of all, we have FileChain. I believe that you're already here. Fantastic. What's your name? Silva, that's great. Make sure that you are at the right slide and then point there, if I'm not mistaken. Is this the right slide?
That would be right.
Fantastic. I'll move off stage and then please take it away. Thank you.
All right. Hello, everyone. I usually don't give a talk at blockchain conferences, but I work here at Epicenter, so here I am today. So FileChain is quite different, right? Because we are not into public blockchain, we are not into cryptocurrency, stablecoin, or smart contracts. Instead, we are into permission ledgers, cybersecurity, and post-quantum cryptography to deal with anything about digital for B2B and B2G in basically all industries. So let's start with one simple problem, a $500 million per year problem, according to the FBI, of money lost by Fidelity, First American, the 2 main real estate title companies in the US, losing money. And we provide a ledger to those companies to actually solve that problem, to fail fast trades, reject impersonations, and basically at the end of the day, eliminate wire frauds. Another problem, a bigger one, $10 to $100 billion to, about provenance in supply chain. That is actually where we come in as some kind of ledger sitting on top of any, supply chain to prevent any mismatch, to detect counterfeit, and that's exactly what, we can do. The next problem we can actually take care of is about generative AI in general. 1, to detect AI-generated fakes, and 2, to monetize any agentic AI platform, right? And so we are working with a partner, even a publicly listed company interested in building exactly that. And so in our case, we are providing ownership and workflow ledger for them to actually record, all of those transactions going on between agents, plus that utility coin, to onboard all those AI agents, to protect liabilities for all of those organizations dealing with those AI agents, and of course, a trusted utility coin, right? And of course, we provide, which is very fundamental for compliance, an audit trail 100% verifiable, and more than 20,000 transactions per second. And so if you think that problem is actually big, well, now here comes the elephant in the room we are actually looking into, which is about data sovereignty. And it turns out that, 2-3 weeks ago, the CEOs of Airbus, ASML, Mistral AI, and a few others co-signed a letter saying, well, we have a digital sovereignty problem here in Europe, and we don't know how to solve it, and we need partners to help us solve that problem. And there is, you may know, a major regulatory push in Europe going on. And on May 27, that is tomorrow, the European Commission is going to release the Cloud and AI Development Act, which is precisely to fight the US Cloud Act, which is about, well, giving away, the European data to some US agencies. And it turns out that we at FileChain are actually the exact solution to that problem. And we are about to engage with some of those companies to actually lobby ourselves and deal with all of that. Right? So at FileChain, we are running 4 ledgers on cyber, workflow, provenance, and ownership. Our main feature is end-to-end privacy with on-chain storage, 100% post-quantum resistance, 2 patents, 10 years of R&D stealth mode, more than 500,000 lines of code, and 8 talented people. And yes, I am the good-looking one. So we deploy anywhere and we integrate everything, and we work with partners like IDEA in cybersecurity or TER, US real estate. And so that's how we actually deal with basically all markets. One more thing, that's specifically to Johan regarding our traction. Those are 6 out of the more than 10 market categories we're in. Our numbers are to the roof with a TAM of $2 trillion. And basically, one little known fact, in China, there are a lot of permission ledgers, and I'm almost done, where our pricing model is value and volume. And finally, a little thing about that slide, which is not actually properly formatted, but just to say that we are into a seed round 2026, and we are dealing with exactly what I said in 27. And finally, if we don't, by 2028, listen to that carefully, the US hyperscalers will start to bundle some fake trust in their offers, and some Chinese DLT suppliers will start to penetrate the market. I'm done.
Yes, thank you very much. Thank you very much indeed. Definitely the good-looking one, but you were slightly over time just mentioning this here. Approximately, yes, you are French. 45 seconds over time. Now let's reset, and then are you ready for the Q&A? Okay. I'm going to hand it over to the investors. And when I give the mic, I press on play. Okay, please.
Thank you. Quick question regarding the traction. Can you tell us a little bit more about the traction itself? How many clients you have, pilots?
We are into infrastructure, right? So we are doing with POCs, and it takes many months to convert into prod, right? And basically selling IP license fees. We have for now about 4 customers, paying customers, $500,000, dollars of direct revenue for us. But we are basically, as I said, doing a little seed round to just accelerate commercialization. But we are in active talks with a number of players, but we are more into prods because we are into infrastructure and not just some kind of app.
Please.
Thank you for a good presentation. So you had a pretty good margin, it sounded like. You had quite a few customers in play already here, and still you're asking for money. So what are you looking to do with the money? You talked briefly about scaling, but what will you use the 400K for?
Good question.
Yeah, good question. So that's just to actually pay for some business developers to actually, accelerate growth, simply because people now realize that permission ledgers are actually a thing, not so much in Europe, not yet in the US, and they are very big in China. And so people are actually, getting more, aware of, that's the way to solve some of those problems. So we need the money to pay for business developers. Now, if we start building the agentic AI platform I talked about, that's 2-3 million. That will be yet another round. And when we actually get into those, sovereignty problems for the entire of Europe, we have almost no competitor in that kind of space. So then it would be actually a 10 to 50 million euros to raise. But first we would have to lobby all of those big companies to make sure they agree that we are the one who can solve that problem.
So maybe I push back on your notion of permission ledgers. So far, permission ledgers haven't scaled as well as the permissionless ones because of vendor lock-in issues, other issues. So how do you expect to overcome that? And also there's an innovation gap over time because you're not taking in everything from the ecosystem.
Well, so as I said, in China, it's by the billions that you have permission ledgers running. So something is working over there, right? Point 1, point 2, we support, 200,000 transactions per second in the speed. And basically, Apple is actually not, completely open source. And still you have smartphones which actually work pretty well. And so the point is, in terms of, innovation, we are not at all into the public blockchain. We are not into smart contract. Those things are not working fast enough, actually, for the enterprise space, right? And therefore, we need to do it differently, which is why we spent 10 years to actually build the entire thing from scratch. And for instance, just as an example, the entire reference code is in Java. So no, fancy exotic programming language, it's just Java, because that's the easy way to integrate with all of the ERPs and databases of the world.
Merci. 30 seconds left. Thank you.
You didn't mention about your team and your sales.
Team and sales, here you go.
So team, as I said, we are distributed. So I'm based here, but a few are here, but actually others are elsewhere. So we are still a small team in that sense, right? But we have actually, good people, so I can show you the faces and talk more about those profiles. But as I said, at the end of the day, we have a strong technical background, but we actually need money to even pay for more, business developers and salespeople to accelerate, right? And so we have the traction. We have the message, we definitely have the prototypes and, everything is ready. What we need is to make more noise. So we need marketing dollars to actually make more noise. That's what we need.
Definitely, thank you so much. Appreciate what you guys are doing. Fantastic, thank you. And indeed, we made some noise and we got the word out, and that leaves us actually then. I've already seen you practicing with Heimworks. Very, very happy to welcome you all on stage. Please give it up for Heimworks, the last but not least project. You know the rules, right? Like 4 minutes and
yeah,
4 minutes.
Yeah, we will see about that.
Oh, at least you have the mic.
Yeah, because I need the clicker because I'm so nervous. I need some...
It's okay, it's okay. Take your time. You ready?
Yes.
Make sure that it's on the right slide. Maybe the other way.
I'm going to the right.
I think the other way than what you just did. Are you clicking?
I think he has a lot of slides, this guy.
It's okay. Like, we will just switch it on once we're on at the right slides. All right, here we go.
There we go.
All right, so I'm going to click on start right now.
So, hi, my name is Victor Peterson. I'm with Heim Protocol, the missing control layer for autonomous finance. The signing problem is already costing billions today. Last year, 3.4 billion got stolen of crypto service providers, and April this month was the worst month in crypto history. 640 million got stolen, over 38 recorded hacks in the institutional industry. And we have the agentic economy coming next. So already McKinsey estimated it's a $3.5 trillion industry within the 5 years. And the same signing problem would just create a bigger blast radius. So the biggest problem here is that a manipulated agent can now sign real transactions, or will be signing real transactions. We already see problems with prompt injected, we see compromised dashboards, and when an agent goes wrong, it goes with machine speed execution. So the big question here is who stops it before the signature becomes real? This is the problem our team has been working with. Myself is Victor. I've been starting an IT consultancy business from scratch with a €4 million revenue with 60 employees thriving today. I was spearheading Microsoft Intune back in the days with a security infrastructure device management software with a beta with a regional responsibility that sits on 8.5 billion market cap today as a product portfolio for Microsoft. My co-founder and inventor is Victor Johansen. He works with critical transmission systems, managing 5 million people, making sure that their transmission and the electricity is on par. He has 5 years in the crypto industry. We have a lead developer with 10 years of experience working with BNP, working with ETH, and working with Cardano. And our newest addition to the team is Jelena. She sits in the APAC region, works with the institutional players, with OKX and with Presto. But the most important thing that the team has been doing is we've been in front of the market. Even if we built the foundation on stealth, we've had over 100 market conversations with the team across the different categories in the crypto space, and they've been all telling us the same thing and where the biggest pain is. And the pain is that they need a decentralized, trustless control layer, where we're moving governance from execution. And so this is what we set out to solve, giving autonomy without unlimited authority. So in order to make that work, we need to have been able to support all the agentic frameworks coming online, the X402, the Elisa OS, the AI stack from Coinbase. We need to be chain agnostic with any chain that is going to be supported, enterprise ready with compliance with governance. But the most important thing that they all told us, we need to have privacy. We can't blast our governance rules and all our secrets and confidential data online, who is accessing our treasury. That needs to be provided with privacy. So, what we built in this layer and how it works would be that the admin group with separate keys sets the permission, the thresholds, the rules. It gets committed with zero knowledge proofs and recorded onto our chain, onto our layer. Now, an AI agent, a user group can transform and use their key or use their wallet, agentic wallet, to transact on chain, but at the same time, a request goes to our layer through zero knowledge proof commitment, and our nodes look at this and say, is this within the rules set by the admin? And if it is, autonomously Heim will co-sign the transaction and it goes online. So we're building it for the institutional players and the enterprises that needs the privacy enforcement layer, and the agentic system builders that out there that need the hard guardrails for the AI agents. Our business model for the more advanced operators are with zero knowledge proof. It's a value secured pricing model, or we have a fixed fee pricing signature for more simple use cases. 1 second now. So the traction side, we have gone from all foundations to prototype, devnet, testnet, we're patent pending, we came out of stealth, we have external market validation with winner in the Gain Ventures pitch competition, we came fresh out of Miami, we came second up in the agentic track there, and the most important thing, we have live clients. Spectrum RPC is the first one signing on, building it and providing this to their customers. And we're set, we have several under NDA, and we're set to main launch in 6 months for a product. The control layer for autonomic agentic finance is still not decided, and Heim are positioned to take that.
Thank you.
Thank you, and sorry.
Yes, I'm sorry. Sorry to be like this.
No, it's me, it's me.
So basically, everyone who went overtime today has been more or less the same amount overtime, apart from
so we're equally bad.
Yes, only Chain Comply has been on time. Okay, so let me stop this, and then actually I will just give this to yourselves, and then who wants to start with your questions? Gentlemen. Maybe something about the business model again, or something else. Please take your time. Please, go ahead. Thank you, Jen.
So are you, when you say paying, are you at POC or are you in production with, your client base? And
right now we are on open testnet, so we're just before we're releasing online. So when we're onboarding clients into our testnet, it's like the beta clients that we sign letter of intentions with them that they will be with us with launch. So now they're testing out the value propositions with us. So we're open testnet, open beta, online. Everyone can download us and test us.
And who are because it seems like slightly ahead of your client base right now.
What?
It seems like a product or solution that is ahead of your clients, ahead of its time. I know it's required, but like, who would be your early client base?
The early clients is the scale-ups now that the crypto service providers, we see a big traction on the conversation with yield aggregators. Like we are, some people say that we are all like a decentralized Fireblocks, but a much more easier lightweight, because we don't need to keep the secrets under check, because we don't even know the strategies of them. So we're more into the yield aggregators on the institutional side, has gotten great traction. The one that are scale up need a lightweight, cost-efficient governance system.
Thanks for a good presentation. So what will people say about you in 3 years' time? And then what prevents larger, incumbents from replicating what you're doing?
As we said, we are patent pending. We got the worldwide patent pending on this technology. What will we be in 3 years? Yeah, we hope we don't know how big the market will be. We just know it's going to be so huge. We hope that we will be the decentralized alternative, where you have the centralized versions that some just need to choose out of governance, but then we are the decentralized version where they can just reach out to us, program their programmable security layer, reach it out. So we're hoping to have big adoption curve along, especially AI agentic agents.
How much are you raising?
We're raising a 300K on safe right now with a 10M cap on evaluation. We will use this basically just for the security audit to go online with the test customers we're already onboarding. Because as I showed you before on this team slide, we already have the team in place. We already are moving and executing on the traction side with the test client, but now we just need the final push to the security audits to make sure everything is looking good, so we comfortably can bring this to paying users. And then we will do the next round.
We still have a minute.
I believe we're good.
Yeah, wow, okay. Well, that means that you were really clear. Thank you so much.
I don't know what it means. Thank you. Thank you so much.
I think it was. Thank you for your time, and much appreciate everything. So then what we are going to do next is We'll make sure there will be another slide here soon. What we're going to do next is, now that we've heard from all the projects, our dear jury members, thank you for your help. Our dear jury members are going to speak amongst themselves for 7 minutes. So either stay here or go to a small back room and have a chat amongst yourself about who the winner is. Now let's remember what are the parameters that be taken into account. Of course, the presentation and the clarity of that. Also the product, right? The business model, the execution, all sorts of, let's say, classical parameters that investors, specifically VCs, take into account. Now, during this 7 minutes, we are going to welcome back on stage Henrik. We already saw you before. And Henrik is actually the winner of last year's pitching competition. If you're ready, feel free to join. He is the co-founder of Sapio. And he will be speaking for a couple of minutes about his project, whilst the jury members elaborate and speak about the projects. Then afterwards, we are going to hear who is the winner of Nordic Blockchain Conference 2026 and who is going to win not only the eternal fame, but also the membership of Blockchain Sweden, as well as membership of Nordic Blockchain Association, and maybe, who knows, a bunch of money at some point, but not now. I mean, maybe investors will follow up and then deals get closed, who knows. Henrik, please be welcome on stage. Put your hands together for Henrik, the winner of last year's edition. Please.
Thank you. Yes, we are Sapio, and we create reserve-backed tokens that evolve with the market. So first of all, I want to ask you a question. Here are 3 different assets, and everyone has their own opinions. So which one of these is your favorite? Is it Bitcoin, the most traditional crypto asset? Is it Ethereum, where a lot of smart contract protocols run from? Or maybe it's gold, the most traditional asset. Or maybe something else. Well, let's have a look at one of them. Here is Bitcoin over the last year. But the question is, what happens a year from now? We have the bull case, 200K, the base case, 100K, and the bear case, 50K. We don't know what's going to happen. Nobody knows, but we can all have our opinion. And now we can look at all of them together and compare. And we can see that Bitcoin and Ethereum is slightly correlated, but actually gold was better than both of them. But the interesting thing is what will happen a year from now. And there are so many different people who will have their own predictions about what that is going to be. And maybe one of these lines is your line, and you have an idea of what you want to do. So one thing you could do is you could go to a prediction market, and you can put up $500,000 that Bitcoin will hit 200K by 2027. And the benefit of this is that you have skin in the game. And when you have to put your money where your mouth is, it leads to more trust. And we can trust these signals more. So this is a great source for bringing trust to finance, actually. But the problem is that this information is not taken care of. It's information without action. So what if we could take all these assets and put them in an asset basket instead? So that is what we have done, right? And that means that we can do something useful with your prediction. So imagine you decided to bet on Bitcoin. Well, that decision led to that BTC grows in the reserve. So this becomes a prediction-based token basket, right? And this is what we call the Sapio Reserve Token. So how does this really work? Well, first there is prediction staking. So you have to stake on your prediction. And the next step is a Dutch auction. This is when the system tries to buy these assets at the lowest possible price on the market. And then there is this performance measurement. Oh, then there is this performance measurement. So what we have invented, really, is a system that couples prediction with decision. So they're one-to-one. So you can never have more predictions than decisions in the system, and never more decisions than predictions. They're the same thing in our system. And this also means that the best strategies gets rewarded. So the winners, they earn, and the neutral ones, they just get their state back, and the losers will pay to the winners. But unlike a prediction market, you can see here that there are many different measurement points. So we take an average over a longer time period to figure this out, who is actually the best one. So this really becomes an evolving currency. So you can see here how they are changing and how this basket is changing over time as people are making their bets. But the interesting thing is, maybe there is a new technology that have not yet been invented, that we can never know, right? And at that moment in time, Sapio can capture that, so it can always stay relevant. And assets that are irrelevant, they will subside, and new ones will come in. So this really becomes a self-improving financial system. So you have the forecasts, and then they are executed, and then they are measured, and then it goes back in this cycle all the time of self-improvement. So we are now launching our testnet, and we invite you all to take part of it and put yourself up on this, join our wait list, and yeah, I hope to see you there. Thank you very much.
Thank you as well. Great to hear about your progress since last year. Thank you very much, Henrik. So I haven't seen the jury members back yet, or should I say the investors and VCs and angels. That actually gives me a moment to briefly reiterate the conditions, right, and the rules of the game. As you see, we've tried to kind of like create a level playing field by really annoyingly coming onto the stage, because all the projects, and those were BlockSide, Stacked by Me, Chain Comply, Lineage Labs, File Chain, and Heimworks, they all had 4 minutes to pitch on stage, after which they had exactly 4 minutes as well for the Q&A. Now, what is important is that, remember, the investors took into account metrics such as the problem and the market opportunity, what is exactly the solution, right, that the projects and their teams are building. As we heard, some are more in the ideation stage, some are already, you know, having their first clients and whatnot. So yeah, they're differing projects, but it doesn't mean that you can use similar type of metrics, right? Other things that they have taken into account are, of course, the traction and the business model. So ultimately, right, how are we going to make money? Like, I run a company myself, and one of our investors told me one day, right, he said, if your company doesn't make money, it's a hobby and not a business. And he was completely right. Of course, this is also something that our investors take into account. And of course, another thing that has been very, very important is actually the clarity of the pitch and the presentation. Now that I've managed to speak, as you've noticed, I can do that. And I've seen on my left, actually, that the investors are almost ready with their talk. Let me just look at the left and see if they're ready to potentially announce who the winner is, and also who is going to announce that on stage, because the idea is that one of our dear investors is also going to share the epic news about who is the winner of the Nordic Blockchain Conference's pitch competition 2026. And then remember, finally, last but not least, that what they win is not only the eternal fame, but also membership of Blockchain Sweden, as well as a fantastic membership of the Blockchain Nordic Association itself. Please, gentlemen, who is welcoming me on stage? Arun, is that you? Fantastic. Arun of UNICEF Crypto Funds. You're all joining the stage. That's great. Please put your hands together, and thank you for your time. Thank you. Thank you. Maybe you can elaborate upon your choice and why, etc.
Okay. Firstly, the fourth judge had a call to take, so he wasn't able to join us. Sorry for that. Yeah, so we were all aligned, I would say, on the top 3, and it became a little bit of a discussion between us to really pick the winner. It was quite close, but we deliberated on a variety of topics around tech innovation, business model, future, then a whole spectrum really. So it was a beautiful pitches from all the teams. So thank you so much for the effort. Do you guys want to add anything before I announce? Okay, fine. We wanted to mention the runner-up as well, if you guys don't mind. So the runner-up would be Stacked by Me.
Fantastic. Stacked by Me, the runner-up, was a great project indeed.
And then the winner is Chain Comply.
Wow, that's fantastic. Chain Comply. Maybe you know what I will do, because I know that we are slightly running out of time. Maybe you want to say something, maybe to thank the jury members, because we have very little time, but you're the winner.
Well, thank you for the trust. The work is just ahead of us, but it's a good start. Thank you.
Congratulations, congratulations. And thank you so much to the gentlemen in the jury. Thank you all, much appreciated. I will just step like this on stage. So, just because we've run slightly out of time, I will keep this very, very brief. This was day 1 of Nordic Blockchain Conference 2026. Naturally, this event has been powered by Nordic Blockchain Association, all the wonderful sponsors and partners and community members and, of course, attendees, such as yourself. My name is Alex. I'm the founder and CEO of Thrilled Labs. This picture was taken kind of like before I became a founder and I had less wrinkles, and now I'm just, working 7 days a week and not having a life. And we're raising capital, by the way, so in case anyone is interested to invest in us, let's have a chat. And we also provide a networking app for y'all if you're interested. Now, this is not that important. What is really more important is that we see each other tomorrow again for another fantastic day here at stage 2 and of course also downstairs. And have a fantastic evening. I would very much like to thank you all for having been here from the Nordics, but also beyond. And I hope you had a nice day. And thank you all, of course, also to the team, people at the audio, and also, of course, the people of Nordic Blockchain Association yourselves for making this possible. Thank you very much, and see you all tomorrow. Bye-bye.